Okay, and we are live. Welcome everybody to a special Friday evening edition of Bootleg Weekly. Roy, how's it going?
Doing really good. It's nice to be have a nice rebound, be at the weekend on a green note, portfolio up, and big news dropping. So, how are you, Tevis?
Yeah, doing good. I'm glad we just posted an interview an hour ago, and I'm glad it's being well received. We see SoFi up just over 1% in after hours, and bro, after a day like yesterday, um, we were like, we don't want to drop this thing on the market being so low, but thankfully everything rebounded slightly today.
Yeah, it's nice to end on a green note, and we'll talk about in our show with Steve a little bit later this evening on whether or not we think that this is just a bump along the tumble, or if this is the rebound, and we'll have a V-shaped recovery in the assets that we hold. So that'll be a good one.
Mm-hmm. You haven't seen the interview, have you?
No, I misunderstood your message. So, yeah, I saw like 10 minutes ago. I'm like, oh, great, it's live. So,
Yeah, it's honestly, man, like I think he was very forthcoming. I think he was super upfront and honest, and maybe we can play little clips of it here. Um, but yeah, it was very surreal. Um, thank you. Getting my money right. Very appropriate name. Says that Noto interview in today's market saved my weekend. Yeah, it was definitely good news. I mean, they reached out to us, and the whole thing got turned around fairly quickly. I mean, as I was telling you backstage, like we found out about it like Tuesday or Wednesday, and then we recorded on Friday and we posted on Friday.
yeah. For clarification, guys, the breaking news is not the nice insider buy that we had yesterday, but the Noto interview that Tevis and Tanner recorded. It is live now on YouTube, on Tevis or Tanner's channel, or on Tevis's X. So, you can check it out there.
Yeah, and I'll post it on my channel tomorrow, and Tanner will post it on his X tomorrow as well. So you guys will have plenty of chances to watch it. Yeah, crazy, man, freaking surreal that we've been sort of doing this for like 5 years, and it honestly seems from my chatting with them that they're getting really, and I don't want to put words in their mouth, but like my impression was that they're getting really warmed up to the idea of doing retail, and they said, hey, look, like we want to do this because Tanner and I were saying like, oh well, you know do we want to do it together, or do we want to do one-on-one? And they were like, if you guys do choose to do a one-on-one, then we can do another one with the other one of you guys shortly after, like in next month or something. And so my impression was that they're open to doing more with the retail community. Chris, I think, of course, had
Yeah.
something to do with the interview for sure, for sure.
Yeah, one of those things that I think is another indicator. I did see the article that was published today, which we can talk about as well if we'd like. But for those that haven't seen it, let me just share this real quick.
Thank you,
I
Jim.
mean, we won't like read or necessarily go through it. I think more focusing on the interview specifically. But we look at what this actually looks like. I don't know if you noticed a coincidence in writing style, or in charts and graphs, or in notation.
Yeah.
But I vaguely recall somebody that covered SoFi for a good long time, much longer than I've been in it,
Yeah.
that had a very similar writing style that recently left for some bank. I can't remember.
Yeah.
Not a coincidence. So, yeah, it's really nice to already see Chris's touch on the business. And of course, the more communication that they have with investors, I think the better. You want to know what you hold. This is a company that has a large retail shareholder base, and at times it's felt like that we've been left kind of in the dark, and that doesn't seem like that's the case anymore. So, very very good. SoFi, bravo, Anthony Noto, Chris, good job, man, and Tevis, you're killing it.
Thanks, man. Yeah, and I think like it's all kudos goes to them because they're moving, quickly with this, just as Jacob is saying here, and I don't know, man. Like I felt it was very forthcoming in terms of how he was answering some of the questions. I want to play a little clip, if that's okay, Roy, uh,
Yeah.
from the interview. Thank you, a little bit marvelous. 10 gifted memberships. I really appreciate that. Goes a long way. Let me see if I can play a little clip for you guys. And I just want to play the last question because I think he was really I mean, he said, he's like, I think I'm going to be a little controversial here. But when he was talking about other analysts, so let me rewind. I don't want to play too much of this. This is live on Tannor's channel right now. So definitely you guys can see the full video on Tannor's YouTube right now. I just want to play a little clip. It's going to be live on my YouTube tomorrow, but it's also live on my X right now. So Tannor, hope it's okay for me to just play a little teaser for these guys. Let's see. And yeah, Tannor, if you do want to jump on, please feel free, man. We'd love to have you on and just chat about the experience. Okay. Let me share my screen. Okay.
This is the pond.
So I asked this question here around the retail engagement. And I'm basically like, hey, are you going to do an investor day in regards to 2026 initiatives and maybe dropping some names on the Galileo side of things? Like all of these things are things that retail really appreciates, and even this interview. So, what are your thoughts on more direct shareholder engagement going forward? I know retail investors have asked for maybe a shareholder day, but that's maybe far in the future. Like, what are the steps towards getting there?
Yeah. So, we've continued to build out our investor relations team. The team published something yesterday for the first time. Having been a research analyst for 10 years and then a banker and having been a CFO, I come at this from, 3 different perspectives, and it's a great prism to be able to look through. And I don't want to, criticize any one party. Everyone has their views. My guess is their views are ethically driven. My guess is their views are very thoughtful, but they're just wrong often and many times misguided. There's opinions, but there's things that people talk about as if it's fact. And so, this whole dilution on the equity offerings, I'm reading it, and it's, driving me nuts. And I'm like, well, can I publish something? And then this is, not just this last couple of weeks, but all the way back in the fall. And, it's not great for a CEO to be publishing their point of view. And investor relations, that's their job, is to communicate on behalf of the company's points of view holistically, not just mine, but Chris's, our boards, our employees, and the realities. And so we will start providing perspectives the best we can. We want to be as transparent as we can. We can't always share every piece of information. Sometimes it's competitive. Sometimes we just don't want to take the risk of sharing that information because it may be misconstrued or the reality may turn out to be different and there's too much risk with the outcome, et cetera. But we will communicate as transparently as we can. I'm pushing the team hard on answering the questions that people have that are unanswered, but also providing a perspective that may be different than others so that the world has a better view. I believe markets are efficient if you give them transparent information. So my goal is to have our company be valued as fairly as it can. That won't happen without more information and transparency, and so we'll provide it. I will say.
So listen to this part, Roy, around the analyst question. I'll play just 20 seconds and then we'll turn it off.
One thing I'll say that will probably be controversial. I asked one of our team members on the investor relations team, I said, some of these analysts are using a different valuation for every company. Like they use this valuation for the company they don't like, and they use this valuation for the company they do like. And if they actually use that methodology on our company, we would actually have more upside than the company they're recommending. And having been that person, I'm like, that's crazy. And they get away with it. And so I said to the team, I want you to go through the research analyst reports, and I want you to apply the valuation. I want you to look at all the companies they're looking at and how they value each company. And then say, what if they valued SoFi that way? Most of the people that are, super bearish on us with these crazy low price targets, they would have us a buy if they actually applied the same valuation methodology to us as other people. Some want to do it on tangible book value, and they're like, well, it's like a bank and its returns aren't 20, 30%, so they want to put 2 times book value on it. That's just self-serving. That's not taking risk. That's not helping their customers, their clients. Like back in 2000 and 2001, it was really hard to value Amazon. But we came up with a valuation technique of PEG ratio using the 4-3-year growth rate.
Okay, so I'll leave it at that for now. And yeah, so Giuliano Bologna, he's been put on full blast, and the rest of this, Tim Switzer, been put on full blast. Like He's like, I'm getting my own team of people and I'm looking at your reports and I'm applying those metrics to us and we'll see what happens.
Well, to be fair to Tim, we did hit his price target today for about 5 seconds. And after that, sorry, Tim.
Yeah, exactly.
Yeah, that is football era no. I mean, right there, like full tackle, just slamming him to the ground. Haven't seen that side of him as CEO of SoFi, so that's really cool. You do see some of it like in past interviews, like a while ago. But anyway, I really love that. I mean, it really shows the hypocrisy that's out there of focusing entirely on one valuation, which, by the way, if you're skeptical of a CEO saying, hey, we're not valued properly, that happens a lot. But even Warren Buffett talks about tangible book value as kind of a useless measure to measure banks. So it's not just Noto that thinks this. Is a lot of people too. It's probably one of the poorest ways to measure SoFi because, I mean, they are a bank, but they're more than a bank as well. And it's weird that a company that didn't have a banking license acquires one and suddenly becomes less valuable somehow. I mean, I don't know.
I mean, he wasn't even saying like yeah, he said, hey, PEG is a better metric. And he was also talking about how he would value SoFi by which metrics. But I think like the very bottom line is at the very least, value us all by the same metric, because you can't just have them at, 2x book value. And then they're also growing, 40% plus. You can't have your cake and eat it too, so to speak, right? So I think like by whatever metric you choose to value them, they're going to be towards the top of the pack, whether it's for growth in their sector or whether it's for how cheaply they're trading, right?
Yeah, and their earnings aren't super mature yet, so you do have more earnings growth than you would expect from a more mature company just because they've been earning for a while. But I mean that. It bugs me to no end when people want to focus on just valuation without growth factored in, which is like, what are you doing? Investing should be forward looking. There's undervalued plays that maybe aren't necessarily, but yeah, when a company of this size is growing at 40% plus year over year, that's fairly rare, especially in this space. Lending, it can do that, but taking on a lot of risk, and we're not seeing a deterioration of those lending assets, the vintages. In fact, the loan platform business makes us even less contingent on those a little bit riskier loans. So,
yeah.
So, in this interview, what was the biggest thing that shifted in your mind as you thought about SoFi?
I think there's many misconceptions that retail might have, and there's times where I'm a part of that, where I'll be overly critical about something. I mean, he talked about the capital raises and how they're accretive. He talked about the loan platform business expansion into home loans and student loans. And he said, hey, student is probably going to come before home loans is. He talked about their plan around international expansion, saying, hey, 2026 is when we're making the plan, not necessarily executing the plan for international. That's coming later. He talked about crypto. He talked about big business banking, which was actually really interesting. So, I think for me, it was holistically this idea that, okay, he does see everything. His hands are tied in terms of what he can respond to. But the fact of the matter is that it's not for a lack of caring or for a lack of, wanting to respond. It's just sometimes that like he's the CEO and he said it himself. Like I think many people might have missed it, but it was just one tiny sentence that sort of gives you an insight into how he's thinking. He's like, hey, I can't make comments like that as a CEO of a public company. Yeah. And he compared, I mean, I think he did a little jab at Vlad and others. He's like, I'm a CEO of a fintech company. I have to be fiscally responsible. He's like, I'm not one of these like Hollywood CEOs that wants the spotlight and this and that. And so like, I do think that the intentions are good. And I think, towards the end of the interview, he was saying like, hey, I really appreciate you guys. It means the world that you guys are, sort of fighting on our behalf. And that I think to me became really clear to see how forthcoming he was in this interview. It's like, okay, he does want to open up and share more information as much as he possibly can. He just doesn't necessarily have the avenue to do that on a consistent basis. And hopefully that's going to change because they are listening, right? Like this was something we I've been asking for a long time, and we, quite frankly, I mean, I had given up hope that I was going to get.
Yeah.
But here we are.
Yeah, I was surprised, but I was less surprised after they actually hired Chris. And by the way, if you can pull up the comment, because I do want to address, there's some negative ones there. There's only one that I want to focus on.
Yeah.
607 Briha 3798.
Sure.
So
Also, I sent Tannor a link. It's in your X, Tannor. 607?
Yeah, 607. He's here out of desperation, is what they said. Anthony Noto, no. So basically, my hypothesis, now this is not insider knowledge or anything, but you don't hire somebody overnight. So and I think really the shift was signaled when they hired Chris and they said, hey, we can absolutely use you in our business. Now, Chris knows the business inside out. He's absolutely brilliant and probably a polymath, honestly, getting to know this guy a little bit. But that doesn't happen overnight. That happened, if you look at the typical timeline of tech hirings between when you actually announce it and you come over officially versus when the conversations actually began. SoFi was trading near its peak, most likely. Now, I don't know that for sure, but that's very likely. So he's not coming here as some sort of desperation to defend the stock. They have other ways of doing that. And some of that we've seen actually even this week. Instead, he's actually coming here because I don't know what clicked to make this shift happen, but they've seen now the value in interacting with their investors on a more regular basis, including retail. And that's a really good thing for a retail laden stock like we're in. So this is just another part of that shift. We saw it with the hour letter earlier. We saw it with a lot more activity on Twitter as well by him and also the staff. So, yeah.
Yeah, absolutely. And you know what? I told this to Tannor and I'll tell it to you sort of live. Like for me, my main goal was to get a good end product, of course, but it was really to have an end product that he was happy with so that it's an encouraging small, first step towards having that open communication. I think that a lot of these things happen through repetition and through practice. And I didn't want us, Tannor, like I wanted us to be sort of bold with some of our questions, but also fair and not attacking, like not asking in a way that doesn't make him want to come back. And I was very happy with the result.
There's some analysts that would love to do that. It's like leading questions with lawyers, only there's no judge to stop that nonsense. Yeah, he is.
Yeah.
And by the way, like on the note, the little jab at Vlad, I love that rivalry. I like and respect both CEOs. I know Vlad more. Both are competitors, and these sort of little things, they drive them forward, which again drives the business forward too. So that helps. It's a healthy competition. They're not trying to like destroy each other. They're just trying to outrace each other. Great thing.
Yeah. It was good stuff, man. I don't know if Tannor is gonna join, but he has the link, so it's probably just late as ever.
Did we'll get more on the price action like overall, but did the rebound in SoFi surprise you at all today?
The rebound in the market surprised me for sure. I mean, come on, dude. Like, Nvidia was up more than SoFi was up. It's just like it's not like, oh my gosh, SoFi, like NBIS, that one surprised me. 16%, 16.5%. BM&R 17%. My entire net worth is moving like a shit coin over here.
It goes from like, well, I got to work at McDonald's until I'm 80 to, all right, I can own Rhode Island.
Yeah, no more McDonald's after today. I don't know how many of you guys.
You gave your notice to McDonald's.
I don't know if you guys can tell how I'm feeling through my Twitter. I was like, starting off 2026 with a new job, and then this was the next clip. I was like, Mr. Market in my portfolio just beating the shit out of it. So, we're back, baby. We're back.
This was SoFi and RSI. So if you guys aren't familiar with it, relative strength index, over 70 is considered overbought, under 30 is considered oversold. Things can get oversold for a while, but this is over 14 days, just a standard measure. But we can also look at it on a weekly basis. And I mean, it wasn't at all-time low or anything, but it has been, like, if you were looked at it yesterday before this climb, like, it was at one of the lowest levels on the weekly basis. Let's put that up here. So at least that it has been in a while. Like, Liberation Day was as low RSI. And when you see things like this, like, individual catalysts again can overwhelm it. So if they had terrible earnings and everything was wrong, which is the opposite of the earnings, maybe it's like warranted. But does this kind of sell off after a fantastic earnings and guidance as well, and macro warrant the same point when the business was not as mature and growing nearly this fast during Liberation Day tariff wars? No. Really not since the bear market had we seen such a low RSI. So yeah, I ended up buying more. I sold some more cash secure puts too, which sadly at 18 did not fill, but I got a little bit more. Well, really it was on Fridays at 24. So
Are we going to share with the people what we bought, Roy? Because I have some spicy news.
I'll let you go first and I'll follow it up.
Oh, dude, I completely just impulse sold a huge chunk of my HIMs right after hours. I think poking the FDA after they warned them is incredibly stupid. I think it's very short-sighted by their management team, and it just welcomes a level of overhang on the stock that I'm quite frankly not happy to have. Yeah. I had a position in the long-term portfolio that I cut completely. The only HIMs I have remaining is in the wheeling portfolio. So I'm going to be writing some aggressive covered calls around that. Maybe hold that, for earnings. But yeah, I don't think I'm on the HIMs, wagon anymore. I did buy more SoFi after hours, though. I bought another 700 shares in the after hours. So got to put your money based on where your conviction is, and quite frankly, it's just not with HIMs anymore.
Yeah, so you're not all the way out of HIMs; you're just mostly out.
I have about 2% of my portfolio left in HIMs. What a wild move, man! HIMs at the beginning of 2025 was like 20 some odd percent of my portfolio, and then it just. I mean, look, I made, so the amount that I had in HIMs, the 5% of my portfolio, I was keeping deliberately at the amount that I'd made from premiums. Because in my mind, I wanted to just play with house money. But after this move, I'm like, why would I just even let go of the house money? Like, I just want to, when Nate sold it, I sold it. If it's bullish, then I wish you guys all the best and make as much money as possible. But I've made a lot on HIMs with the leaps that I sold before the last earnings, and I've been pretty sort of public around all my sells and buys to HIMs. So would I buy it lower? Yes, I would. Do I think it's going to go lower? Man, I think if the FDA actually pursues this, then it's always going to be an overhang. But at the end of the day, if you have a management team who does stuff like this, I'm always going to be sleeping with one eye open, because I don't know what they're going to do next to completely tank, the stock. They did release some good stuff. It's actually ironic, Roy, and I'm sort of rambling, but like, I bought 100 shares of HIMs at the beginning of this week, and I completely sold out of my HIMs because the FDA news came out, right? And they released some cancer. The news around the early cancer screening, and I thought, wow, that was really cool. I like that. But then they go ahead and 2 days later do this, and I'm just like, guys, come on, don't do this to me. So
so I also have some breaking news that I exited not just one position this week, which was PayPal, but I also exited HIMs, and I did share this on Twitter yesterday. As far as a timeline, I'll go through. Like, this is not the beginning of, and I did buy a new position, by the way. Tried to get more through cash secure puts, bought some shares as well. When Tevis is like, hey, did you buy? I'm like, I'm just going to buy now. So after a big run up, but under 90 is still like a very good buy. It's not 70, but it's NBIS, guys. So, but as far as HIMs, Nate and I were talking before all this stuff, before the FDA, before anything actually from Novo Nordisk. We were like, man, I don't like this pill thing. What are they doing? It's low margin. There's a lot of legal risk that they're taking on from a position of weakness, and things with Novo Nordisk are kind of falling apart. And he ended up selling, I think, at a higher level than I did. Now, when Novo was pushing back, I'm like, sounds like that there's going to be some sort of legal action, whether lawsuit or FDA. FDA head commented on it last night, and I'm like, yeah, I'm going to have my alert set for any HIMSS news. And that's exactly what we got. I think, of course, today wasn't a great day, but it did recover as the day went on. And then when the news dropped, I looked at the price and it was down like less than 1% in after hours. And I'm like, yeah, I'm gone. And the reason, guys, if you can throw this up, Tevis, it's not just one thing. Like if you guys have been watching us cover it on Bootleg Weekly, you've been watching some of my videos and Tevis's as well. Really, they've stumbled in terms of execution, and there's been some yellow flags, as I mentioned. This is a big red flag as well. So I did like some of the things that they did. I don't blame them for the GLP-1 headwinds. Zava was good. Labs is good. I like the cancer thing, by the way, as well. Semaglutide in Canada. There's a lot of these little touches. I like the ad also for the Super Bowl commercial. But then there was like weirdness. And I felt like this was hiding information. It's the opposite of what SoFi is doing by giving us more. And whenever something like that pulls back, unless they kind of address it and they're like, hey, this is why, or it's no longer relevant. Netflix did that once as far as the way that they were regarding internal metrics. And even then, the market didn't like it. But yeah, this didn't sit well with me. Nothing illegal about it, but just they've had this weird relationship with Novo Nordisk. I hated basically headlining last earnings, trying to grab the attention away from a pretty weak earnings, honestly, that they're having talks. Talks means nothing. These guys talk with everybody routinely. They could say that they had talks with Eli Lilly just because they had one of their sales guys talk to another one over lunch. It means nothing. They brought over Mo Elshwani, the CEO of Cruise, and there's really not been anything meaningful coming out. Now, it is, 7 or 8 months since then. Maybe it's a little bit early depending on what they're launching, but I don't know. I was interested in, because it was an odd fit. I'm like, but he does come from a tech background. Maybe there's something I don't know. And you can see before Cruise that he might have some leanings in this way, but it just hasn't worked out. Pillback guy I was very excited about. Nadir. He was gone in 2 weeks. They missed guidance. They would have missed revenue except for Zava. And then the CEO comments. This was a big one to me as well. Right before, as we were kind of doing really well in price action, he said some comments which were very clearly trying to manipulate the stock, which, not the greatest, but okay. And then he did it right before a planned insider sell. I mean,
yeah,
that doesn't sit right. And then this, when the pill dropped, I did post about it. I'm like, hey, I said actually at the time in the post, I'm like, I'm more excited about the cancer thing. That seems really, really good to me. This, I mean, I wouldn't expect it to be up on this, but I'll take it. And of course, it faded that move and sold off because of the regulatory stuff. But yeah, ultimately, it's the same thing as PayPal in a way. Execution stumble, thesis a little bit weaker. I think that this battle with the FDA is going to be an overhang that no matter what the results are, they can't win. I mean, it's not against the FDA. There's an appeal process. This can be dragged out for a long time. What I'm saying is there's going to be an overhang in the stock price action despite the results. And so in that way, they can't win for a while until it's cleared up.
Yeah, and they directly named Hims and Hers, guys. What do you guys want? It's do you see what happened to VG? Yeah, screw that. I don't need any more lawsuits, for me to be a part of to overhang on the stock. The FDA says it will use all available compliance and enforcement tools, including seizure and injunction against companies marketing unapproved compound GLP-1 products. Fuck that. I'm done. Nope.
Yeah. Well, and even if it's ultimately ruled legal, the speed and then singling out Hims, and it's the FDA that decides this, guys. It's not it goes to another agency. They can appeal, but they're going to get more than a slap on the wrist. They're going to have an example made of them. and they will likely fight this. I do think that there's a chance that they do win against this. Some other bulls or on hims have indicated they do have a very, like, if you look at their board, a lot of these people have been on the FDA before. So they'll probably win. But even in that scenario, you're looking at years of this battle back and forth, because there'll be, well, maybe not even years, but at least a year where there's this overhang. And that's not why I'm here. So there is a scenario, of course, I might get back in at some point, but I'm always willing to change my mind on something. But I just call it like I see it. And I think there's better opportunities. So I actually sold and then bought the same amount of NBIS.
Hell yeah.
After hours. So it's not the best price, but I wanted the NBIS. I'm like, the puts are not filling. Let me have some now. I can build it out.
Yeah. I mean, I thought about buying more NBIS, but then I just went ahead and bought more SoFi. But I'm with you, man. I'm right there with you. I'm glad you're in NBIS. I messaged Roy this morning and I was just like, did you buy NBIS? It was at $68. And Roy was like, I wrote a put for $70. It's gone. And I was like, no. So I'm glad to hear that you actually bought NBIS. And
I made up my mind. Like, I want a piece. I'm like, the puts are gone. Let me, I'm going to buy before the end of the day, depending on what after hours look like. Like, if it's up 30% more for some reason, then no. But so it's not the same amount as the puts would have been. Puts would have been a meaningful position for me if they had actually filled. But the shares, it's a starter position. So I guess I'll probably buy a little bit more aggressively this next week, just to round up off the number of shares, and then because we're going into earnings. That was one of the things that I was also thinking about before this. Like, Iran, it's kind of in the same space. It's not a 1-for-1, and there is an overhang on them because of crypto, which NBIS doesn't have. I think NBIS is better executed as well. But they had that massive drop despite what seemed like a decent enough earnings. So I was kind of wondering if, this was just being very CapEx sensitive, and the market was just going to go into NBIS earnings, already see it oversold, and just dump on it, because I'm pretty sure, Tevis, that they're going to go ahead and accelerate CapEx because the demand is just ridiculous. Like, we've seen from everything this earnings season, it's pointing that direction. So I'm like, okay, I don't care. I'll buy a lot more if that's the case. Probably even buy some options. Let me get some shares now, even if it's 17 or whatever % higher than yesterday. Hate that, but sometimes, the last thing on this, I had kind of the same thing happen with Rocket Labs. Matt Money had been pounding the table. When it was like at 450 or so, he said, now's really the time to get serious and looking into this, just in a general thing, not a message to me. And I took it. So I ended up researching. I did not invest and then investigate. Instead, I just researched, and I'm like, yeah, thesis is sound. There's an upside here. I think it's higher than where, frankly, it should be. But, that's neither here nor there. It's a great company. And it rose up to, I think, $9 a share. And I'm like, well, let me get it at $7 when it falls back, and it never fell. What I should have done was just said, okay, there's still, like, my upside was not like, oh, this will double, over the next several years to $9. It was a lot higher than that. So what I should have done is just said, you know what? Didn't get the best pricing. I messed up on that. Let me just get some now because there's still more upside. I've learned to do that. It takes, admitting like you messed up. And that happens a lot to me.
Yeah, it does happen a lot. And I think with HIMS, I don't feel bad at all because we made quite a bit of money from premiums, leaps, and also the shares that we did sell off in tranches along the way. I mean, this thing, Roy and I initially bought within a couple of weeks of each other. And funny enough, we sold within days of each other. And we bought it initially at $13 a share.
Well,
and
you did.
Yeah. I mean, I think you bought it 15, 16?
17. Yeah.
Yeah. Same. And it went all the way up to $72. We were selling cash secured puts, covered calls. I got my entire position taken away 2 times because this thing went up and down. And I probably held it on for longer than I should have, but the amount that I held on, it was like house money at that point. So I don't really feel that bad about it. It kind of sucks that the story didn't play out because I don't want to invest in stocks today and knowing that I'm going to get out in a year from now. But that's life, right? I think not everything works out. with HIMS, I'm still keeping a portion of the position through earnings just to see how that, like, what they report, what the guidance is going to be, if they're planning on doing anything around this. So we'll see what happens. I am really glad you're Nebius, though. I think, dude, I'm so freaking excited about Nebius. Everything that I read about the company is just like, I'm very excited about it.
Well, and the other thing is like inference is like very clearly heating up with what's happening, like with Anthropic. I mean, even OpenAI, even though they've kind of stumbled a little bit. It's tough. There's a lot of people saying like Trader Tevis and, that he flips in and out of positions. The reality is if a thesis weakens or is broken for you in a stock and there's a stronger conviction elsewhere, why would you keep the other one? Like out of nostalgia or loyalty? Ultimately, we're here to make money. There are positions that Tevis has had a long time. He was buying Tesla pre-split, right?
2019.
Okay, yeah. And you continue to hold. Now you've trimmed but at significantly higher levels and are still a ridiculous amount of your portfolio. SoFi is one of those where, I think if we're looking 5 years out from here, you're still holding as much SoFi. It might actually even be more.
A lot.
A lot
More.
Yeah.
Are you kidding me? Yeah. No. Like SoFi started out as a small, position for me. I really built my SoFi base in 22 and 23. Like my cost basis is, granted, I bought, more shares at $20 right now, but my cost basis is still like $12 on SoFi. That's after, multiple averages up. But I've been I have SoFi that I bought as low as $4.50. Like when Noto bought at $4.50, I was like, screw it, I'll buy at $4.50 too. And it turned out to be just fine. So I hope to hold Nebius for just as long. I bought more Amazon today. I bought 100 shares of Amazon at 204. So that was great.
What did you think of their earnings?
I thought the reaction was overblown, man. I don't know. Maybe we can talk about this. So
let's do that.
Let me throw this up actually, because I talked with Tannor about this and he sort of had a different, he wasn't bearish on Amazon, but with regards to the CapEx piece, that's where I'm curious to get your thoughts. So let me throw this up on screen. Now, I think there's two ways to interpret this, and I just want to understand. So here you can see the forecasted capital expenditures of the hyperscalers and how much they basically announced, right? Because they all reported over the past week or so, and they increase year over year. Amazon came out one-upping everybody with $200 billion in CapEx. Google 180, Meta 125, Microsoft 117. And largely a lot of these players had different reactions to the CapEx, right? Like Meta pumped on the CapEx, Amazon dumped on the CapEx. Now, where I want to have this conversation start, Roy, is to me, and maybe Nate is also in the chat so he can let me know, but to me, higher CapEx is bullish for Nebius. Right? Because like Microsoft and Meta already have existing partnerships with Nebius and they cannot fulfill all of that demand. And so if they're investing so much more, then that's going to bode well for Nebius. However, I think the other perspective, which I don't know, I really want to validate that I'm thinking about this the right way, is that the more CapEx means that the more these companies are investing in their own proprietary build out. And as a result, will reduce the reliance on third-party, data centers or like companies like Nebius or Iron or any of these. Yeah. So I'm not sure which is correct of those two perspectives.
I think there's a strong indicator that one of those is very, very obviously correct. And it's from this earnings season. It's actually what pushed me from like Nebius is pretty interesting to like, I need a position. There's been massive pushback, and we saw that with Amazon last night on CapEx expenditure. And so what that really signals is these massive hyperscalers are going to continue to still build out, but it would be accretive if they would have shareholder support to actually do in-house rather than actually go through Nebius. But the reality is that would mean accelerating CapEx even more. And right now we're not at the breaking point yet, but it's pretty close. So if they did that, like into next year, they're like, hey, not only we're going to accelerate, which I think that there's at least 1 to 2 more years. There's an interesting study. I don't know if you saw it from MIT on like the limit of sizing as it relates to LLM. Like each doubling does so much, but there's a ceiling, which basically implies that there's a ceiling to what is necessary as far as CapEx with some more normalized growth. Still very bullish NVIDIA. But regardless, we're in this odd window where shareholders don't want to just have, like the metaverse type of project where you're just spending endless money and not really seeing the ROI right away. So I think that they will probably be able to maintain this level of CapEx, which I know is more than the earnings of most of these companies, but they can honestly do that a while if you look at their balance sheet and also the faculties that are available to them as far as credit and also shareholder price, even though it's gone down a little bit. So what that shift is going to do is I think that they will not be able to sell to shareholders this vision of we're also going to bring this in-house. And also that's always something that they can do later to us. They don't have to be like, okay, we're going to do this anyway. Forget the shareholders. We're just going to suffer through a lot of people pulling out their money and losing the trust of these guys. And as a result, the stock price goes down for everybody, including insiders. Instead, they'll be like, you know what? Maybe 2 or 3 years down the road, we can look at this. So that in the meantime, we have a company now. It did rise up more. That's basically going to be trading like into today at 2 times their revenue, annual recurring revenue at the end of the year. That's astonishing, growing at over 400% compound annual growth rate over the next 2 years. So I think profitability is probably a year further out than what is supposed by analysts, but there's not many that cover that. So,
yeah, I think the argument that Tannor was taking was that because I was like, dude, they're increasing CapEx, they're going to do more business with NBIS, and Tannor was like, no, that's incorrect, because the CapEx is for assets. So like they would buy more hardware, let's say from NVIDIA, versus what they pay NBIS, they're paying for a service like the GPU hours. They don't own the chips at the end of the contract. Therefore, it would be considered OpEx. And that just got me thinking about this idea of like, okay, is this something that will over time reduce the reliance in the third parties? But then you also have to think about like how massive that demand is and whether these companies even want to build everything in-house, even want to vertically integrate. Like Amazon maybe might be a little bit different, but there's a lot of these companies that they just don't want to build in-house. It's faster for them to leverage third parties, or they can just buy out a third party altogether.
Yeah, and that could actually happen too. Can you throw up Investing for Freedom 642? This is actually what we're saying. He says, you guys misunderstand how CapEx is calculated. Deals with new clouds, that's NBIS, are only CapEx if a finance lease, even then it's only in the principal. That's exactly our point. That's why the big guys are likely to wait on building in-house, at least in the quantities that they actually need, rather than rent through NBIS, because of that exact reason. Shareholders are almost at their max pain point as it relates to CapEx growth. And so they have to be a little bit creative. The easiest way is just to wait on building out internally for a while, which means demand for NBIS might actually be underestimated significantly.
Well, lucky for you, Roy, and for me, NBIS does report earnings next Thursday on February 12th. And I will be covering that earnings live on my channel. I will be waking my ass up at 7 a.m. for you and for NBIS to listen to what they report, and then they can validate for us. But I think that NBIS, by and large, like every time they've reported earnings, they've really increased or reiterated that demand is very strong and increased the sort of total addressable market in our mind around, hey, what does the demand look like? Like last time when they did earnings, Arkady was saying, hey, look, we're seeing the demand be completely, like our backlog is completely filled until the end of 26 and probably 27 as well. And he said it so casually that I was just like, I'm sorry, what? Let me rewind and listen to that again. It's wild. So yeah, no, I think Nate brings a good point here, right? They can only build so fast. and they're going to dilute the crap out of investors to essentially accelerate the building process, right? They issue shares. They're not profitable, right? But they're growing incredibly good. So I think this is also why in the weekly NBIS videos, I look at the data center buildouts in Missouri, Indiana, Vineland, and others.
Yeah. They're kind of the BMNR of this type of play, where the share price is actually pretty relevant just because they do. A lot of it's been senior convertible notes, so it's not exactly the same thing as an at the market offering, but they do have that at their disposal as well. So, but ultimately, there's a whole lot of capex that they need to do, and there's primary way is through dilution, but it's accretive if you look at the revenue that's going to be generating, even taken conservatively.
Thank you so much for the $10. Roy and Tevis are absolutely boss level amazing for doing content like this. Thank you. Yeah, normally we don't do bootleg on Fridays, and we were thinking about potentially having this be the first episode of Ron and Travis show. But you guys might have to wait a little bit for that. But this is a good time slot. I like it a lot, actually.
Yeah. This won't be able to do next week, but we're looking at relatively soon, maybe 2 weeks out, starting the Ron and Travis show at this time. So we're at Ron and Travis Fiesta Friday. So as that, based on some feedback from you guys, is going to be a show that is, we're not going to take away the Q&A from Bootleg. We're going to keep that. We've heard, no, you must keep that. That is the show. And it is my favorite part of the show. The Friday, we might have at most one topic. Some weeks we may not have any. And it's just Q&A. Still, focus more on the markets than anything. But I mean, you can ask weird things like, "What's your favorite kind of pie?" And then we'll answer 3.14159 2653589 7972
All right, nerd. I used to know that as well when I was in grade 7.
We homeschool our daughter, and I was teaching her about pie the other day, so that's fresh in my mind.
What's the joke behind the name? Somebody called us by our wrong name once on a stream, and we just rolled with it.
That's all it takes.
Honestly, man, I think one thing I want to do is I just want to do small reaction clips. If people send in small clips for us to react to, that could be really fun. But I don't know how logistically to organize that in a seamless. I haven't dedicated a lot of thought to it, but yeah, Ron and Travis show. It's happening, guys. Roy, let me get your thoughts on this right here. This is something that I found kind of interesting. Amazon just filed for mixed shelf offering with an undisclosed size. Why would Amazon need to do a mixed shelf offering?
Acquisition, major one. It's either that or, which I really doubt, that they're like, hey, forget what Roy just said as far as CapEx. We are going to build it all out. But I doubt it. I think this would be a major acquisition.
A major acquisition. And if, in fact, they do a mixed shelf offering, when could we be looking at a potential timeline for that major acquisition?
I mean, it's kind of interesting because a lot of times you'll announce those two at the exact same time. So it may not be an acquisition, but I can't think of anything else that's even reasonable because the CapEx stuff, I don't think is. Maybe just controlling interest. I don't know though. But no, I would think relatively soon, very soon, because shareholders already had some concerns with the earnings. What's it doing after hours?
I mean, I think this news was yesterday.
Oh, yesterday. Okay.
Yeah. It was after earnings.
Yeah.
But do they need to dilute in order to meet that CapEx target, or are they fine and this is just something else?
I mean, look, we can pull that up. Let's do that, actually. It's been a little bit since I've looked at the cash and cash-like positions as well. Dashboard.
Yeah, Anthropic. Yeah, dude, I'm shocked at how many people don't value Claude is elite.
Dude, it's legit, and the way they built that up. I remember a discussion we had, I think on one of our FinTech Friday grab bag, maybe after hours. We talked about private equity, and I don't know if you remember that conversation. Tannor was like, OpenAI must have it, and I think it'll be fine, but that's probably weakened even in his mind. And I was like, the number one thing that I wanted to own was Anthropic. Now there was another two that I'd be interested in, SpaceX obviously as well, but Anthropic, like even then, it was really obvious with model context protocol that they had worked on, like, and also the take rate that they've had. That's a wrong term, but the adoption rate of coders, like they dominate there. And there are weird people, some of whom I'm related to, that use Google for that. And there's a few other competitor products. OpenAI launched something that looks like it'll try to compete with Claude, but yeah, they are killing it. So if Amazon got them, that would actually be insane. Okay, so let's look at actually cash and debt balance sheet. And cash equivalents. And then we need to look at debt as well. Long-term debt. Well, actually, I can do total long-term liabilities. Actually, no, it's total liability. Sorry. All right. So yeah. They could use some cash.
So hold on, what are we looking at? What's the cash?
This is total liabilities. Now, I don't know Amazon super well, so there's probably some things in there. It's like, well, that's technically a liability, but not really. Let me know if so, if that's a meaningful thing. But yeah, this is the total liabilities. This are the cash and cash equivalents. Debt is a little bit. What's that?
88 billion. Is that did I read that correctly?
Yeah, but let me do debt just so I'm being fair. So
yeah, debt is not that bad. 66 billion.
But it's still like, if you look at the CapEx number that they issued, that might just explain it actually right there. I think that's it, Tevis. Now we don't know the amount, so that it could actually be for several things. But yeah, they said 260 billion, 200 billion. I'm getting them confused with Microsoft.
200 billion in CapEx.
200 billion in CapEx. Okay. Yeah, that's a meaningful amount above what their cash is. They do make cash. So if you look at the free cash flow, actually, I should have done that before I close that out. I'll just take a look and see if it's worth showing here. But yeah, if they acquired Anthropic, that would be even cooler.
Dude, that would actually be really, really good. And I think they already have a big stake. Aren't they like the biggest shareholder in Anthropic?
I don't think I have a way to look. Yeah, I don't have a way to look. I know that they're one of the majors. Well, maybe.
Hold on, I'll get you the answer real quick, Roy.
Yeah.
Give me one quick second here. I know they're fairly big, but I'm not sure if they're the biggest out there.
Yeah, I rarely look at who holds.
They own 15 to 20% of Anthropic.
Okay. Yeah, they're one of the majors.
Yeah, they've kept its stake as a minority position. They have no board seat.
Yeah, I mean, like, okay, I see that they had a $13 billion Series F raise at $183 billion. So if this was, I don't know, this would probably not be the vehicle that you would choose for this kind of acquisition, but we'll see. Probably CapEx. But yeah, that, like, if they acquired Anthropic, I'd really have to think about getting Amazon.
All right, yeah, I would be like tripling down on Amazon, because Anthropic is not. Did you see Anthropic's advertisement?
Oh no, no.
Can we even play that?
I don't know.
I posted. Do you want me to play it?
I'm fine with it. Yeah.
All right. Well, it might demonetize us, just so you know. So we might not get $5 for the stream.
Well, I'm going to run an ad just for that.
Okay. Okay, guys, let's watch it. It came out yesterday, I believe. This is the new model. And then not only that, but they also hold on, I'll find you the Claude ad. So Claude ads. This one is the funniest one. Claude is just amazing. Like here you go.
Like the funny thing is, back in 2023,
You ready for this?
Yeah, go ahead.
Okay. So you can let me know what company they're making fun of here, Roy.
Hey, can I get a 6-pack quickly?
Perfect. That is a clear and achievable goal. Would you like me to tailor a personalized workout plan?
Yes.
Perfect. Let me personalize this for you.
Apple.
With your age, weight, and height. Whenever you're ready.
5'7", 23 years old, 140 pounds.
Got it. I'll create a plan that focuses on aesthetic strength training. But confidence isn't just built in the gym. Try Step Boost Max, the insoles that add 1 vertical inch of height and help short kings stand tall. Use code HeightMaxing10 for big discounts.
What's the difference between me and you? Me and you, me and you.
Honestly, like even the performance, my own usage of OpenAI, and we pay for ChatGPT. My wife still loves it, but it's been really rough. Gemini has been absolutely doing well for me. I actually like Grok even better right now. By the way, vibe coding, somebody asked, it's just natural language coding. I'm just saying, I want you to build this with these parameters.
Yeah. Yeah. So now you planted that seed in my head around them buying Anthropic, and that would be very good if that happened. But we'll see. We'll see, Roy. What did you make of Amazon's earnings? Like, did you think there was anything off kilter, like anything that made you want to buy, or what?
No, not really. Amazon's, I think, always, unless I get Anthropic or something like that, going to be in my mind a good investment versus a great one. I think they'll be fine. They'll be decent, but they're not. They're like Microsoft. There's, even with all the software angst, they're a great company with great leadership. I just think that there's excellent elsewhere, and I'd rather invest in excellent. And I could be wrong. Definitely, I've been wrong many, many times before, and I'm the first to admit that. But I listen to Amazon earnings with a view on the investments that I currently hold. So, like, basically, at this point, it's a given that as they enter in these earnings, although I think we might see a pause to the aggressiveness just because of the way that these earnings reacted consistently all through this quarter and the narrative that's kind of spitting up on CapEx. But regardless, we knew that they were going to raise that CapEx spend. Even before TSMC reported, even before the lithograph stuff, it was very clear. So that wasn't the surprise. But what I wanted to hear basically is, since Amazon kind of went last other than NVIDIA, which doesn't count because they're the one that's selling a lot of these products, is if the board perhaps says, you know what, let's soften our CapEx, not below guidance, but that they don't raise it at all above expectations. That would be, to me, a signal that maybe like they're going to slow, like meaningful. Instead, I think the increase is just going to be more measured and not as aggressive for the reasons that we mentioned. So my read on this was like further confirmation. NVIDIA is just stupidly undervalued. I think that's an elite play. And so I bought more yesterday, 2 days before. I think it was yesterday, actually. And glad to own more. That was some of the dead PayPal money. I still think it's stupidly undervalued. Ended up buying more air test systems. Actually, because of the stock price action, it was less than the weight that I had it at before when it raised up above 30. So I'm like, I'm going to take the opportunity, get that up to that nice 10% figure, which is insane for a microcap. But going on with what's happening with like Teradyne, we talked about the automated testing equipment. They're a beneficiary as well. VG I ended up buying because I'm like, hey, energy is really the big choke point right now. What's going to really kind of throttle some of the throughput of what they wanted to build out. They need more energy. There's other needs there, obviously, as well. So that was an easy investment for me too. And yeah, it was just mostly built around in the NBIS, just like inference and great company. Like the quality of NBIS is great. It's so some people do push back on that a little bit, and I think it's mostly like the Russians are involved and in control, and they had a bad experience with them. I kind of get that because I had a Russian roommate one time, and it's not the best experience. But regardless, no, like they've met or exceeded milestones along the way. You look at the actual product, not just what they say about it, but what their customers say about it, and then those that actually look at that type of offering just to see which is the most competitive. And they're right up there among the leaders, if not the leader in many of those measures. So Manuel pointed that out in that really good stock take episode.
Yeah. Again, we're gonna see it, dude. The thing is that everything trades in such baskets. Like I was telling a friend today, I was like, we're literally just slaves to institutions. Like my emotions are just a toy that institutions play with, because like nothing fundamentally changed, and my entire portfolio is down like 20% on one day and up 20% the other day. I'm like, all right, well, it's just crazy, dude. So it'll be nice to get some more information on what NBIS is actually doing and what the prospects are. Like they officially announced in Missouri a couple of days ago. That's really cool. And we're getting more news around France and other data centers in the US. So it's going to be good to actually have the stock trade on actually things that the company is doing. That's a crazy concept, right?
Yeah. It's wild. Like I'm looking at the reason why it's selling off, and it's like either software is getting eaten by AI, which inference is going to do very well, or AI isn't real, but somehow CapEx is too extreme. Like none of these narratives make sense at all. Like they're just trying to figure out a reason for the stock selling off, and sometimes fear and just a semi-healthy pullback. Now the jobs numbers were pretty terrible. I'll give them that, but yeah.
Dude, whoever Kevin Warsh is, I'm slapping that motherfucker in the face when I see him.
Man, I still don't. Yeah, I don't understand like announcing it early. Like, what in the world is it? Just him like floating this idea, and then like, the market didn't like it. Let me pull it back. I still don't. Actually, I hate that even more. To be honest,
you know what, Roy? I totally in one of my BM&R videos gave Tom Lee crap for going on CNBC and saying, oh, we think 2026 is going to play out like 2025. You're going to get uncertainty around the Fed, which is going to lead to a big pullback in the first half of the year and then a run up in the second half of the year. And you know what happened? Exactly what he said. Sean Farrell here, the head of digital asset strategy at Fundstrat, Tom Lee's company. My base case is a meaningful drawdown in the first half, with Bitcoin falling to 60 to 65, ETH to 1800 on December 17th. And Sean Farrell posted yesterday, here you go, February 5th, said, almost time to go shopping. Talk about nailing it, right?
Yeah. Yeah, we'll see
Right on.
Ultimately if that's the case. And if so, Tevis, was this crypto winter, and then we're emerging to the other side, just quickest winter ever, I guess, from October through January?
Dude, I don't even know what crypto winter is anymore, because with so much leverage in the markets and institutions just yo-yoing this thing around, it's wild, right? Like Bitcoin falling to 60, and then they're still like, hey, it's going to go to 180 in this year. And just the swings that you're having is like there's funny business going on in the background, and that wasn't necessarily the case before, because Bitcoin was not in the sort of crosshairs of big institutions, and it now is, or crypto in general is. So we could get things that are not necessarily completely rhyming with in what happened in the past, because we have different factors right now in the amount of people getting margin called and the liquidations and all this stuff.
Yeah. It's weird. So essentially what crypto winter is more related to volume than it actually share price. There is obviously, as volumes become less and there's less interest in crypto and crypto projects, the price actually goes down, but that's correlation rather than causation. And then the other thing is there's less interest and excitement in crypto in general. And so we've seen that fade really since October, really this peak here, and a pretty significant drop in volume. So yeah, Tom Lee did say, but this is a weird thing, Tim. So if we go back here, we can see, previous times it's not really that much of a drawdown. 2022 was though. So if we look here, we're at 2.9 trillion to well into the bear market. Like we're looking at a third of the volume. Almost, a little bit more than a third of the volume, or less than a third of the volume. Versus like from peak here to here, it's really not quite there, and it's not as sustained. We had a lengthy. Now the volume started slowly increasing. I was thinking 2023 was going to be great for crypto, so I was loading up. But yeah, I don't know. Like the brevity, the lack of a drawdown in terms of volume. Maybe like this time is different in terms of the volume, but sentiment certainly was there. Price action pretty much was there as well. So if this is winter and this is the bottom and that's it, I mean, that's really exciting because we know what happens in future bull runs of crypto, although probably less certainty in that just because if this is winter, it's weird. We didn't get the blow off the top moment either.
Right, exactly. And it's just really strange, behavior that's going on. I posted this recently, Roy, a couple of days ago, actually. And this is why it's strange to me, because here I said, look, we now have 37 million ETH that's staked, which is over 30% of the total supply, okay? We have over 4 million ETH in the entry queue and rising versus 0 ETH in the exit queue, which is this. Like, absolutely crazy. Big discrepancy. We have 16 million ETH on exchange reserve. So 13 to 14% of the total circulating supply is on exchange reserves. And it's at multi-year lows. And yet, despite all of this, Ethereum, as of that post on Feb 4th, was at 2,100. And I think it went even lower than that. So the thing that I struggle to understand is that with so much of the supply locked up and the supply-demand economics working in our favor, that it's still being sold off so heavily, which leads me to believe that like how is such little volume moving the market in such a big way,
Yeah. So, I mean, part of it was leverage. There was a lot of leverage, including some new tools. Like you saw the notorious like 50X Bitcoin ETF, which, I mean, it's a trading vehicle. So you do with it what you want. If you hold long term, you will lose money. Like it's 100% guaranteed. The way that's built. Regardless, so like that led to a lot further price action. Also in equities, margin to some extent, but also leverage. So options and those leverage ETFs were at, I believe, all-time highs, if not very close to that. So what that does is accelerate if there's a big concerted drawdown. It's kind of like stop loss hunting. There's also some of that too, but it just continues to cause further price action to the downside, which causes further price action to the downside. And eventually, at some point, it stops and it bounces hard. Now, this does well. We'll save that as far as whether we're out of the woods or not for Steve. But yeah, that'll help. The less that there is uncertain, the better it is for crypto. So yeah, I don't know if we're out of the woods on that. That's one like set of names that I actually avoided buying the dip in is when there was crypto exposure. So Robinhood is still my number one position. Massive jump up today and great generational company. But sometimes when it's your number one position, it's enough to just hold and say, hey, I don't care long term. They're going to be great without needing to add and top off your long-term position every time it goes down. A fair bit, mind you. Figure I didn't get in for that reason. And so I chose NBIS just because it's kind of funny because it's not, they use crypto. The price of crypto and volumes and everything has nothing to do with how their business works at all. I mean, like there's like 1% on the democratized prime thing, but basically nothing. So the market, I was kind of curious if it would do this, if it would lump it into the crypto basket and, crypto is terrible right now. Let's sell off Figure. And it was, I'm like, oh man, it's an attractive price right now, a little higher than I like to get it. And I like, if we're in a prolonged crypto winter, could see stupid prices in that. Coinbase likewise didn't get into for that reason. And BMNR didn't add to that either. All I did was my every single week allocation to Bitcoin, which whether the price has gone up 100% over the last week, whether it's crashing down and sentiment is terrible, just a DCA. Same amount every week, no emotions. That's how I want to play that. Thank you, guys.
Yeah.
There's a 100x Bitcoin ETF. What? I
Like,
guess they
what
need 1,000x.
What? I don't understand, man. How does that even work? Like, how does that? I buy 100x, and what? It falls 10%, and I'm living under a bridge. Like, what? How does that work?
It's not just that. If it stays flat, I mean, the decay, Tevis, it's gone like in a day. I don't get that, man. I can see, like, I saw the merit. If I'm not a trader, I do some swing trading, but not like day trading or anything. Of like the 5x levered ETF for like Bitcoin and crypto. I'm like, it makes sense if you're a technical investor, you're a trader, you understand the risk, you're not blowing up your account. But like this, I think it's just almost like a free advertising. Like, we're gonna announce this product that nobody should use, nobody will use, and we're gonna have so many disclaimers in it that nobody signs up for it, but it'll get people to go to our other more sensible products. So I guess 1,000x Bitcoin ETF, here we come.
I don't know, man. Like,
5,000.
I know people are getting blown up, but like, good. Like, stop ruining it for the rest of us. There's stupid leverage. Like,
Yeah.
and it's institutions too. Like, they're all shorting, and you can see it. And it's just, this is why I say, man, like, we're completely at the whims of what institutions decide to do. It's like, all right, guys, whenever you guys feel like making ETH go up, go ahead and do that, I guess, if you're done making money on it going down. You know, it's just,
Yeah.
I'll just be here.
I don't know about that. Like, short term, yes, you're absolutely right. But what happens to the downside and cause this capitulation to just accelerate also is impact on the upside, because there are retail, but also a lot of institutions as well that do go short. And some of those are levered, beyond just being a short position naturally. Some are through options as well. As those get blown up, it leads to that those amazing days in Bitcoin, and of course every other crypto rises as well. If Bitcoin's up like 8, 9, 10% in a day, not crazy, it happens. And you see like the altcoins just do ridiculous things. Ethereum does really well. And it's just because of the upward price action, collapsing shorts, collapsing negative leverage.
Yeah.
Or leverage to the downside.
All right. Shall we jump into some questions, Roy? What do you think?
Let's do it. Bonus bootleg.
Bonus bootleg. Let me remove these. Okay. Tevis, do you still hold Hims and Hers? Yes, I do. I do still hold a portion of Hims and Hers. I sold more than half of my position today because I didn't want to hold it anymore. And I hold a little bit. About 2% of my portfolio is in Hims and Hers. I will try to hold that through earnings, and I'll see what they say on earnings. But if those shares get called away, that's fine with me. I'm not going to be adding more to Hims and Hers. And Kelly, I'm really sorry. I don't know what to tell you. But by NBIS, I don't know what else to say. Sorry. What is the next Hims? Zeta? I think we both think NBIS, but
yeah, if they're referring to a position that we see very high revenue growth leading to very high upside and relatively undervalued still, like after the massive rise, yeah, I think under 90 is a very good buy, which is why even though it was up like 17% today, and I got it like after hours, guys, like I'm just worst time to buy in the last 2 days by far. Wrote some cash puts, it didn't fill. I'm like, hey, there's a lot more upside than this. I'm just going to be humble and admit that I messed up. I should have just bought shares, got greedy with the cash puts. It just felt safe to me. So yeah. If you mean like position that we get out of, I'm not in Zeta right now. I think Tevis, are you in Zeta? Okay. Yeah. So they're not meaning that at all. Zeta interests me perhaps as a swing. Like, I think it's a really good company and that the upside is loaded more towards perhaps this next year to year and a half, long term, I don't think I'd really want to be a shareholder. Maybe even not like much beyond midterms. So
Yeah. Yep. Agreed. ETH A, I don't know what that is. BMNR, SoFi, Amazon top picks.
it's the Ethereum ETF.
Okay. Which are the top picks of these?
SoFi, BMNR second for me, and probably ETH A because it's the closest thing to ETH in that over
And
Amazon.
Amazon last?
Yeah,
My brother, what are you saying?
I'm saying I'm more bullish on SoFi than Amazon. You are too. Saying I'm more bullish on BMNR than Amazon. You are too. I'm more bullish on Ethereum, which is ETH A, than Amazon. You are too. That's not saying I'm not bullish on Amazon. I just think that those have higher upside.
I would put Amazon second, and then BMNR third, and ETH A fourth.
All right.
But to each their own. Are you in anything like Johnson & Johnson, AbbVie, Abbott, or others?
Nope.
Negative. Jonathan Price, Mr. Him's House himself, I believe.
Oh, hey.
Yeah.
Yeah, I'm kind of curious. I haven't. I wanted to, and I ran out of time before the show. Wanted to see your take on all the stuff with him. So, by the way, if you're as you're watching, you've done incredible coverage on company. It's been very exciting. I recently had an exit with PayPal, and I've been covering it for years. They just, for me, the thesis broke. I'm not saying that that's what happened necessarily with him. It did get weaker, I think. But I made the exit. It was hard to do just because I'm still rooting for them and sad that it didn't work out. So if you do that, or if you stay long, like either way, you've covered things very well. I felt like you've covered things fairly, like you're bullish, but you're not like ridiculous, being a ridiculous bumper. You even admit when things are not the best or not your favorite, and usually you just break the news. So thank you for what you've covered and what you've done. You've made it a lot easier to hold HIMS up until this time. So kudos to you and best of success down the road.
It's actually interesting, man. When I was in New York, somebody said something to me that like it's stuck with me. And he's like, dude, whatever happened with HIMS? And I was like, you know what? Like the management team, this and that. And, it's gone down quite a bit because of blah, blah, blah. And he was just like, nah, man, it went down because all the content creators stopped making content about it. And the sentiment completely plummeted. HIMS House went away. You guys stopped making content about it. Everybody got less excited about HIMS ever since they missed that one metric. And that's why it went down. And I was like, that's interesting. Like, to what degree the vicious cycle goes as content creators stop talking about things. So, like, I know HIMS House went away for a while and then came back afterwards. And it's like, it's really interesting because, especially for these smaller names, they become staples in that community,
Yeah, I'm just pulling up HIMS House, and I'm just seeing the breaking news. All the stuff that we covered previously. I don't necessarily see his take, so sometimes that's the right way to do that, especially when you're like, I'm not sure about this. Like one of the other things too that we didn't discuss too much, like peptides was really exciting, and that was already supposed to launch, if I'm not mistaken, correct?
I believe so. I think they were saying it for 2026. I think you might be thinking of testosterone and menopause launched in what, October, I want to say?
Part of that offering, yeah. So
yeah.
I mean, like I still think it's a good company and good opportunity. It just looking at NBIS and then realizing like I still have some cash, but honestly, if the cash secured puts filled, my cash position would be under 1%. So they didn't. So I still have some, but I'm like, dude, I need more cash to be able to buy what I think is a screaming buy. So just looking at it, like I've told you, Tevis, and I think all of our audience as well for the last couple of months, that if there's something that I have to cut because I see a screaming opportunity, that HIMS was the furthest down there. Now, PayPal got cut worse because those were absolutely terrible earnings that completely broke the thesis. Thankfully, I got it like 45, which is still terrible, but it's below 40 now. So, but yeah, I needed more money. So HIMS has weakened in my mind. Still made a lot of money on it, but NBIS, man, I can't ignore it. Like, I've done this before. You can get stuck in a name where you're like, nope, it's a good opportunity still. I understand it well. I'm not moving my money, but I've had that happen before where I'm like, okay, well, when I get money, then I will invest it in this thing. And that thing just takes off and runs. And the thing that I'm holding stays the same or goes down. And in one case, actually, it went down some. And it's like, okay, I need to change. I don't need to like flip in and out of positions on a daily basis, but I've been holding for a while and the thesis has gotten weaker. And I'm like, there's a screaming buy and I'm leaving money on the table by not going there. I'm going to do that. So,
yeah. I wonder if also we like have left, like, I'm just trying to think about what are the learnings retroactively. And I wonder if one of the learnings is that like we gave it a lot of rope, you know, where HIMS did miss their numbers for the first time. And that was like the first sort of indicator. And then the second indicator was the CO, eyes emoji. And then, so on and so forth. There was like other little signs, and we kept making excuses for them to be like, oh, it went from a strong buy to now being a buy. And if it went from a buy to now being a hold, and it went from a hold to now being like, I'll cut it, but wait until next earnings. And then we just freaking cut it anyways. But in between all of those sort of phases, there was like $40 worth of share price depreciation. Yeah. So I don't know, man. Like, I don't know if that's a learning, but I've also been on the other side of that pendulum, right? I've cut things too fast and those things have like skyrocketed afterwards. And so it's so difficult to actually do this correctly.
Yeah, I'm kind of wondering how many bought the dip over this week. If you did, just put it in the comments. I see a few people put that. Not wrong to have not bought the dip. It can still go down further. We're going to talk about what our thoughts are on that with our show on Steve here in an hour and a half or so. But went from a hold to a bag hold. Yeah, that can happen. Even then, though, like if at some point like the thesis on something is broken, you don't have to bag hold. Like it's okay to exit even down, take the losses, move it into something that you think is better. Just make sure that it's not you're not like the one thing is. If you're not familiar with revenge trading, I know you are, Tevis. It's like, hey, I'm going to take on a lot more risk than I'm comfortable with to try to make all my money back really quickly. Happens in gambling. Also happens in any kind of betting, including sports betting. Also happens in equity investing. So you might be like, okay, I lost, $3,000, and I'm going to go then put $500 in there on like quadruple leverage something. It's a good way to lose money if you operate on that, taking on more risk than you think you should. So I'm not giving you advice, Tevis. I'm just saying for our audience. I'm not calling you out.
That's never happened. That's never happened to me before, ever. So
I think all of us have done it at least once. I've done it once. You've never done it at all?
Of course I've done it, Roy. I feel called out and I feel attacked. And
I mean, like you've not been doing that at least since I've been following you and I've known you. But I mean, when we're new investors, like we're just dumb and don't know what we're doing. And we're scared the first time we see things. And there's so much to know, and there's so many different philosophies and ways to go. And you're talking to bulls that are like, this is going to $1 billion, and bears that are like, this is going to zero, and you're going to lose your house. So then you hear about options the first time, and then like leverage, and it's like, oh man. So it's kind of a shock that any of us persevere through that, but here we are.
I don't even know if I want to keep going with the show after that. Like I feel
my degeneracy is limited now. I'm an old man relative to you, though. So like we're asking me like
relative to me.
People were asking me on like Robinhood, like, why aren't you buying more? And there's like three reasons. One, if it's a crypto winner, it can absolutely go lower, even though I think it's well oversold and unwarranted. Two, it's already still my number one position by far. And honestly, like three, just looking at the price action, it can always get sillier and more ridiculous. And so, but I figured if I wanted to add, I've only had shares in Robinhood for a long time. I'm like, okay, let me wait for it. If it gets to silly, stupid, ridiculous valuation, I will buy conservative leaps as far out and far of time as I can, just to get to the other side of the winter, and put those at more conservative levels, but get some leverage in there on Robinhood. That was $50. I figured it probably wouldn't get there But with ETH and with what was happening with Bitcoin, I'm like, there's a chance. So it's still a chance. They have earnings next week, actually on Tuesday instead of Wednesday for some reason. Very excited for those. But yeah, did you buy more Robinhood at all?
Not yet. Also, Franzi, fuck you. You see this? You see this? Right? This is revenge trading in real time for you. All right. I'm 31, guys. I'm toast. I'm screwed. Yeah.
It's billionaire stress. So
No,
it's going to turn you into a silver fox when you're 40.
Yeah. Oh gosh, dude. Yesterday I was just like, I screenshotted just my daily losses and I sent them to my cousin. And he was like, "I'm sorry, what?" And I was like, "I'm dead inside."
Like for real. When I was just doing personal investing, I've invested in the market since I was like 13, so it's like forever. But it's just broad index stuff. Outside of like 2 times, it just didn't have the brain space, didn't have the money. Is when I was getting degrees. Still working on one now. By the way, defense is almost scheduled, so getting close. But regardless, I remember. I like just how overwhelming it was when AMC was my first like ridiculous gainer. I don't know, like push back on me. That's DJ Roy when he didn't know what he was doing. I did buy a lot of Palantir too, but AMC, I was like, let me put a good chunk of my money, which wasn't very much. It was just taking money that was the free stuff from the stimulus, like many people did, and adding some money to it as well. But AMC did very well, and I made a quick 4x, and I'm like, when it was going up, some of those days, I'm like, okay, I've made more in this day than I make at my job in a month. Like that's insane. And then when it started tanking after the dilution, there's some of those days that was the opposite. It's like, dude, why am I even working? Like I've lost a month and a half of income, or 2 months or 3 months at one point, I think. So made a lot of money from it. And then there's been a lot more of those moments since then. But I don't know what it took, Tevis, but somehow in my mind, like I just regard this as it's just numbers on a page until it actually hits my bank account. So it's kind of like a game. Now, it's a game that I treat very seriously because I know that the stakes are quite high, but I don't freak out if I like what I'm in. I still see like the long-term thesis is very intact. Doesn't matter what the share price is unless I'm wanting to add more, in which case it does because it's an opportunity.
Bro, you have no idea. Let me say this. Nobody gaslights me the way that I gaslight myself, okay? I'm a master at self-gaslighting because whenever my portfolio is down many figures, I'm like, are you retiring tomorrow, Tevis? No, you're not. Do you need this money? No, you don't. And it's just like, I could retire tomorrow, but not anymore. But I just keep like reinforcing this, like, it's okay. It'll be fine. And I honestly, I think a lot of it is just gets better with repetition,
Yeah. It like once you see something once, like especially that it's scary, like COVID was a little bit before my time, but a lot of people were brand new then. Going through that time, that's probably the scariest thing that's happened over the last 6.5 years. Probably over the last 10, actually. 2018 really, I didn't think I held the candles to that. Bear market, that was scary. Liberation Day, scary. Yin Carry Day was like insane. I remember we had to have an emergency and we put up like the suicide hotline number and everything. That's when your hair turned gray. I remember it. While we were live, your hair was just like morphing into all gray. I'm like, dude, this guy has lost like probably $500 million today. So,
bro, this comment, can somebody ban this motherfucker? Oh my God. All right, let's keep going with the questions. Roy, Palantir stock not gone up after 2 banger earnings. At this price to earnings, why hold anymore? Held since 15 and confused.
Yeah. So for myself, my average is actually higher. It's probably closer to 15 now because I've been DCAing. My average was in the 12s when I started taking some profits lower. There's a few reasons. One is I want to own more Palantir. I'd love to own at least a 10% weight. Valuation is too rich for me to add very much. I nibble here and there. Had we fallen to about $100 a share or even lower, I would have sold something, kidney maybe a kid, I don't know, to buy more Palantir. Tongue in cheek, but like honestly, it's a
which kid? I'm sure they're going to watch this.
So I've got 3 of them, so I mean, like I I don't know, like the older one's probably more valuable. The
Yeah,
person
so
is a
that's
teenager.
what I was gonna ask. Like, okay, you have three. Okay, you're gonna sell one kid to fund your Palantir purchase. Do you go off of which is the most valuable, like in the eyes of the market, or do you go off of like which you dislike the most? Like, how are you thinking about this, Roy? Give me an.
You got to think in terms of Warren Buffett. So it's all about ROI and ROIC. So that's a big. No, just kidding.
Yeah,
You
it'll be
know,
the middle child.
or a middle child. Yeah. He's a great kid, by the way. He's working on his mechanical engineering degree. So, but yeah,
Valuable.
regardless, what's that?
Valuable.
Yeah. No, it's one of those like the AI trade. I'm like, dude, AI is not going to disrupt that. It is going to increase demand for that, if anything. For the foreseeable future, it's hard to see out more than like 10 years, but I mean, just it's obvious. So, what was I saying on
Palantir, you want to sell?
Oh yeah. So Palantir valuation has been very rich. It has come down quite a bit. It still will. You look at the guidance. I'm kind of frustrated because this week was so busy, and then there was so much news that I like had to direct my focus to other things. The PayPal like selling out to like the earnings was the day after Palantir. They have done the impossible, Tevis. They have raised gross margins while they're scaling revenue at and above 70% and guiding for the same off of a higher and higher base, seeing net dollar retention, which is Elite is considered 20% or above. They're at 139%. What's happening is growth drivers that are just continuing to accelerate. AI agent race will continue to accelerate this as well. Like pretty much every single thing that's happening out there, macro related government stuff, commercial, except for international. That's a one like weak chink in their armor outside of governments, even kind of including governments. But regardless, it's now, although it did pretty well today, getting to a point where instead of like extreme, ridiculous, stupid valuation, getting more towards high valuation. Not cheap at all by any means, and no one should say that it's cheap. I mean, you look at the forward earnings is what I'm saying. Look at the forward price earnings. There is a decent chance that we see it continue to sell off in the current, unless this marks a shift towards the software as a service narrative, which is weird that Palantir would get caught up in that. Because the reason for that is AI is apparently to kill software as a service. What specifically? That in part is Palantir. I think it is the best company in the world, or at least one of the very best companies in the world. NVIDIA is probably number one. Palantir has to be top three. I've thought that for a long time. There's a reason why the market cap is extreme on it. There's a reason why, I had some rough days this week. I'm not going to lie to you. And you could see further downside as well. The valuation is extreme. I still think it's going to compound very well over the next 5 to 10 years. Now, the last reason is not just to make money. That is most of why I invest. And you don't want to fall in love with a stock. Case in point, HIM's thesis broke. PayPal thesis broke for me as well. I got out. Didn't fall in love with the stock. People were concerned that I would. I mean, I don't. There's been one time that I have. In Robinhood, I have to be careful there because I might be as well. It's really falling in love with the company. Love the people who are working there. But Palantir. Like, do I love every single thing that they've ever done? No, I can't say that. There's no company I can say that about. I mean, I criticize and push back on Robinhood and SoFi, and I'm very bullish on each. I've done that with every single one of my holdings except for ones that I've held for very little time. But I love what they're doing as far as making AI actually real and tangible. They're driving real value to companies, and their ethos is not AI eating software and eating the world and replacing humans, but instead AI enabling humans to basically scale their skill. And so at the same time, it's like extreme data protections and extreme consciousness towards civil liberties. It's like, dude, do I love, again, every single thing about them? No, but I love the company. And so even if like the thesis broke for me, and it has not, like I think it's actually accelerating, which is ridiculous, I would still own some Palantir out of nostalgia. It wouldn't be a huge position. It'd be like 1 or 2% of my portfolio. But I mean, like, I'll just be honest. I'm very biased towards Palantir. I think it's biased for a reason. But yeah, I'll admit it.
Yeah, I mean, I think it's fair. I think it's definitely a different company than it was 2 years ago with the growth rates accelerating now. By the way, Elvis, thank you for becoming a member and also for the donation. It was great meeting you in New York. So yeah, man, thanks so much. Really appreciate it. Yeah, like I think I don't know. It's always going to trade at a premium. Palantir is, um, and it's going to take time to grow into that valuation after a parabolic move like the one it had. So I understand if they report amazing earnings and the stock doesn't really move, it's because people were expecting them to report amazing earnings. As amazing as the one they just reported, I don't know. It's pretty good numbers. So yeah, we don't know where necessarily they're going to go, but also keep in mind like they're going to have some pretty tough comparable years if they keep this up.
Yeah, I mean, like they're not going to grow 70% year over year for like the next 5 years. That's
Yeah, physically, like how do you even do that? Like, thank you,
I mean,
Renee,
like,
for being a member.
yeah, we have a lot of questions, so I'm not going to get into it. And I need to find time to record that video this weekend. But they're like doing the impossible, dude. If I'll put this out there to you, Tevis, I would encourage you to take a look if you have time this weekend, and I'll try to get a video out just to kind of help you. But figure out what price you're actually comfortable owning Palantir, because if this is just a speed bump on the way down to further lows, at what point would you want to become an owner? You might already have an answer. I don't know if you'd want to share, but
I thought about it. No, I definitely thought about it. And I think, like, again, you got to keep in mind, Roy, when I think I sold Palantir at the exact like from a fundamental perspective at the bottom, right? Because I bought it at 7 and I sold it around 18, something like this. And I doubled my money. I was in, I was out. But when I sold them, I didn't really sell because I doubled my money. I sold them because they said we're going to do 30% CAGR for the next several years, and they put up a 13% quarter. If you actually look at the growth rate, that 13% quarter was the absolute bottom. And then they did 15%, 18%, and it just freaking skyrocketed for there. And I was just like, going back to my HIMS point, right? Palantir was the opposite, right? Because I sold it too quickly and I didn't give them time because I was like, they put up, 15%, 13%. I was like, I can see this trend. And then they just had AIP just launching at that time, and they completely turned it around. Versus for HIMS, I should have probably sold them the first time that they missed or something like this, right? So yeah, so that very bottom there is when I sold Palantir.
12.7%. And that was a terrible quarter. I think that might have been the quarter that Alex Karp was like pounding on the table. Maybe it was like one before or one after. I love Alex Karp, but I was like, dude, like, what are you doing? Like freaking out in an earnings call? That's a terrible look. There was, and there still is, high SBC, although SBC right now relative to revenue is like, I think the stock-based compensation actually was like 2.2% or something on the year. So it's not like nothing, especially given their float size, but much better. But yeah.
Look, Roy, hindsight is 2020, but if you can go down a little bit and throw that slider back so that we can only see the quarters until June 2023, right?
Yeah.
And then I'll show you guys what it looked like, right? Okay, let's go up. Now, this is basically, I was like, okay, the total revenues look to be plateauing, right? The total revenue percent change is going in one direction. And meanwhile, you had management who said 30% CAGR. And I'm looking at these quarters. I'm like, how the hell can they get to 30% CAGR? And so I said, okay, I've already doubled my money. I don't want to lose those losses. I'm going to sell out. And then you can pull that slider back and you can see what they reported. So I think all this to say that I'm way more bullish on Palantir today than I was 3 years ago, because the growth rate is essentially what dictates that bullishness. And they did an absolute parabolic rise that is very well warranted why they have the stock price that they do. So I'm not fundamentally against getting into Palantir again. It would just have to make sense, right? And I would have to trust that growth rate is something that they can feasibly sustain, and that there's a total addressable market capture that I think they can have. And I just haven't posed those questions to myself in a pretty long time, ever since I sold it.
Yeah, there was, I don't know if they have it here. I'd actually be surprised. Yeah, they don't. One of the things that was happening was SPAC drag. So they had invested in a lot of SPACs back before the bear market, and analysts accused them of basically buying revenue. Really not the case of what they were doing. Instead, it was kind of an investment into these future businesses, of course, hoping for a good return on their premium. But they were also wanting to establish themselves as somebody that is very capable for startups and just kind of corner that market. And then it gave them a natural bridge into a lot of the spaces that they didn't really have tentacles, so to speak, in, to be able to draw and figure out like what this space actually needs to thrive, which again helps them cross sell to other competitors. So, but that was part of this. Part of it also was enterprises really pulling back spend during the bear market. So yeah, this, I'm not going to lie, like it concerned me, but I'm like, there's still what's happening with data, what's happening with modern enterprise stuff, and the mess that I experienced at the university I worked with, that every single time there would be an update on one of these like Salesforce products or Microsoft products, and they'd say, oh, it's a minor update, it's not going to impact anything. The entire system would be down for multiple hours because it's a Frankenstein's monster mess. And talking with coders and everything, I'm like, yeah, this is a product that's going to do very well. Now, until really the OpenAI moment, we didn't really see that significant acceleration. But I think like here we were talking like, okay, this type of business, there's been a clear and fundamental acceleration or inflection rather, and likely an acceleration. And we got a big moment, of course, as they launched AIP in the boot camps. That actually changed their sales cycle and everything about this company. Now, like if you look at projections, I guess one last thing from this, it's astounding. Well, we had it on the prior slide, but if you look at the revisions, that's not even what I was looking at, but it's kind of ridiculous. If you look at like, let's go back to the financials, and then we're going to go look at the projected as a percent here.
Yeah, Tannor, you can definitely join. The link is still in your inbox, which you haven't checked. So whenever you want to check that, you can join.
Yeah, but I mean, like analysts are, I think, not bullish enough on it. The net dollar retention, I think, speaks for itself, and then what's happening in the space. Like OpenAI even launched something this week. I don't know if you saw the announcement, but some of it resembled what AIP does. The problem is, I think OpenAI is they're behind for one. They don't have all the experience and data in the space. They're not even trying to duplicate at this point forward deployed engineers, which was a term that Palantir coined. It's now like one of the hottest terms in software engineering, just because like it works. Like these guys are geniuses that are at the helm. So yeah, I do, but like to be fair, like one last thing. And I tend to not anymore like bring up the Palantir thing because it's like it's too much as far as like you guys selling. But what you said like is correct. Like revenue, it was decelerating. It wasn't certain that would turn around. And had it continued to probably another couple of quarters in that direction, Devis, I might have joined you in exiting or at least trimming some of my position. Because remember, in that day and age, I was 90% Palantir, so it was a scary thing to see. Okay, there's frustration here, there's deceleration. This is a significant chunk of my net worth. What in the world is going on? So, yeah.
You call out my gambling degeneracy. And second, you call out my bad trades. Bro, I don't know what I did to offend you in this, but this is some fighting words. All right. Any leaps or covered calls you guys are playing for NBIS? I have $185 covered leaps for January 2027. Tannor, welcome.
Welcome. Thanks for having me.
Do you have any leaps on NBIS, Tannor?
No, just common shares.
Are you recording? Your camera quality is maybe it's out of focus or
what?
Okay,
it's better now.
It's better now. How's it going, Tannor?
Oh man, I'm doing well. I'm just looking at the reaction from the community. It's just insane. I'm looking on X and YouTube and everything, and I think we did a pretty good job at keeping this under wraps, even though it all unfolded in like 3 days.
Yeah, like guys, I didn't even know until like an hour or two before the stream, and I thought it was dropping like at this time, so I didn't watch it before. But still, I've only seen a small clip, Tanner. But I'm excited for that.
Can I play you the thing I showed you guys on X? Can I play it?
Yeah.
All right, don't touch anything. I'm gonna play it. This is
volume warning.
Oh yeah, volume warning, guys. Volume warning. Do not.
It's loud.
Yeah. Here we go.
I thought I had it all together, but I was led astray. The day you walked away, you were the clock that was ticking in my home. Changed my state of mind.
Ladies and gentlemen,
Love so hard to find.
we got him.
That was not the clip.
That was the wrong clip.
That was not the clip.
Hold on.
Can you imagine? You just played.
Yeah. All right, here we go.
It's always good round 2.
Yeah, I'm glad that we did the dry run of this live to 500 people. Hold on. We have the actual clip. I think I spoiled the surprise, but I messaged I messaged this to Tanner, and I was like, "Do you guys think I should play this?" All right, hold on. Let me actually play the real clip.
I thought I had it all together, but I was led astray. The day you walked away, you were the clock that was ticking in my home. Changed my state of mind.
Ladies and gentlemen,
Love so hard to find.
we got him.
Just the comments.
Demonetized. Yep.
Oh,
Anyways, that's a vibe. That's a vibe. That clip.
it would have been good on the first go.
All right, we didn't invite you here for this shit, Tanner. All right, enough of you.
You know what's
Okay?
funny
Everybody
is
makes mistakes.
it was eye-opening to work with Tevis and for Tevis to work with me because we had such different ways that we wanted to do this podcast. And like Tevis was like, "Here, can I call you and let's sit in a call for 3 hours and discuss the exact questions we're going to ask?" And then, my sort of strategy was, let's just go in and we'll see. Like, it's just SoFi. and finding a balance there was funny.
Dude, I feel like you should share your Notion doc on the Devin Ryan interview. Roy, I don't know how this guy does it. I don't know how this guy does it. The Devin Ryan interview is like 4 bullet points, and they're not even complete sentences. They're 4 bullet points of random words, dude. And I'm like, how did you do a full interview with it? It's just
I straight up did an hour and a half podcast with Devin Ryan. I had 6 words on my document, but here I'll try to find it because I will share that. But then yours, like I was going through a full sheet, like he just kept putting on like exact wordings of how to word the question.
Yeah.
No. You should share our Notion doc of like our questions.
Yeah, but that's after you cleaned it up.
That's how I think, man. I get it all on the page first, and then I clean it up. And it's just like Tanner was like, "Dude, this is way too much. This is overkill." Blah blah blah. Because I grouped everything and I color coded by who was going to ask what question. And the thing he told me after the interview, Roy, was, "I'm glad you did that because we were running out of questions."
No, I would have been fine.
So my methodology is exactly like yours, Tanner, except almost every interview that I've done, they wanted the questions, probably because I'm less well known and have less of a track record beforehand to go through legal. So I'll give them that, and it has to be full sentences. So I'm like forced to be like Tevis, but I'm more like Tanner in that regard. So
you putting this up?
Do you want me to? Okay.
So this was everything that I had that I wanted to talk on. and then this was Tevis's, and then Tevis ran it through Gemini, and then he ran it through Claude, and then he ran it through Gemini Final, and then he like these were the actual questions that we asked, and then it all and I was like, what is going on, bro? All I brought to the table was this.
All right. I'm sorry. This sounds like free work that's not welcomed. This sounds like effort.
I was playing
That
Minesweeper
made-
the whole time.
That made a great interview. And I was like, how should I phrase this question? What word should we do? And you could just see Tannor just like this, just clicking. And I'm like, dude, what are you doing? And he's like, Minesweeper. And I'm like, I can totally tell who you are in the high school group project.
Yeah.
No wonder Tevin has gray hair. Exactly.
One of them has a C-suiter mindset. The other is just living his best dream right now. So.
This
Love
was
you guys
my
both.
this was
Oh,
my
he's
full. These were my full notes on Devin Ryan's podcast. I put market perform on SoFi. You called a pretty large upside. Hood, Wealth Front, Coinbase, Circle, eToro. Put his name on X. 10% things, and then I needed to remember his name, and then they also needed some disclosures, and that was it. I just wrote 5 companies that I was like, oh, I need to remember to touch on these.
Dude, how are those notes, Roy? Do you know? Oh, Roy should show you our actual notes for the bootleg pod. It's like, oh, it's a lot, and it's like group tweets, and it's categories with group tweets.
You are very well organized, and I love that because I'm organized, but I do a different level of detail, and it just like you make it work. Like otherwise, it would be more less of a cohesion, more of a mess. The mess is fun too, though.
Tevis vibe coding. No, Tevis is coding. I'm vibe coding. What I'm doing is vibe coding.
Your vibe coding light.
Yeah. Yeah.
Essentially, your vibe. You can vibe code yourself. Like actually, the Robinhood event where they showed that off. Like everybody can be a vibe coder just using Cortex or any other product out there.
Did you get an invite to that?
To the Sauna Club?
To the Take Flight?
Yeah, I did.
Okay. Did you just get it?
Yes.
Okay. Same.
Oh, I didn't get an invite to that. But then again, I've never been invited to any of their events because they hate me.
Yeah, I need to look at it. Well, we'll talk afterwards. I think I'm going to try to make it, but it's short notice.
It is short notice.
It requires traveling for you guys?
Yeah.
Yeah, it's JFK, I think.
All right, Tannor, you're disrupting our show. We're in Q&A, okay? Harry is
sorry.
asking.
I thought we were going to talk about the SoFi thing.
Oh, I'm sorry. Do you want to come in as a guest and take over our entire docket of topics? Please, go ahead, Minesweeper.
You think I'm playing around, dude? I play, and you don't know this.
You know what he told me last night? He's like, I swear I could play this professionally. And I was just like, cool. That's great, Tannor. That's great, buddy.
You have no clue. Yeah, I'm gonna sleep. I'm gonna sleep well tonight.
Like legit though, he is a very good minesweeper, and you guys are a lot better at chess than I ever was. So
That he's really good at chess. Yeah. Okay, let's talk about the.
Okay,
podcast.
Harry's asking, is Amazon, Meta, Google taking on too much debt? Potentially. Spending like my missus in a shoe store. Tannor, do you agree or disagree around the CapEx?
No, I don't think that they're overspending. They're the biggest cloud company in the world, and the second that they set up this capacity, it's immediately monetized.
Yeah. Yeah, I think that's going to be the big question. It's like how much of this CapEx ultimately turns into revenue for them.
Yeah. And for the most part, I think some people are worried about the Amazon Leo stuff. It's going to take longer to monetize stuff of them, increasing delivery times and going to rural cities for Amazon.com. Like there's some concerns there. But for the actual cloud stuff, I am not concerned about that.
So my take, Tannor, I'm curious what your thoughts were, is essentially that we've seen shareholders rebel a little bit on the CapEx, not so much the spend, but I think the acceleration of the spend, and there's concerns on that. I don't think that this means if they stop doing that, these CEOs are likely to stay the course. Huge mistake, I think, if they don't. Too late to go the way of Apple and just say, we'll just skip this one. But I think that the significant increases in CapEx spend are probably at an end. That they'll have moderate increases here and there. So not bearish for the NVIDIAs of the world at all, but more sustainable. Like it's above what they have cash for, obviously, but there are vehicles for that.
Jensen said recently that, like today he said this, that we probably won't know when the end of demand will come for another 7 more years. And he's not often wrong.
Yeah.
We'll see.
He is a CEO of a company that benefits from things like that. But I mean, like, who would you regard as a better expert in the world?
When has he made exaggerated claims though that have, not come true?
Yeah,
there's a new. Is the second iteration of Rubin coming out in H2 26?
Yeah.
Yeah.
Yeah. So sorry.
Do we know when?
No,
I don't follow NVIDIA that closely.
So Vera Rubin's not even out. Essentially, the product releases annually, and then you get 6 months of each of the products. So you get, Blackwell Ultra, Vera Rubin Ultra, that sort of way.
Right.
But we haven't even seen Vera Rubin yet. So Vera Rubin Ultra is a long way off. We haven't seen any of the specs, anything like that. That'll probably come at GTC or,
Right.
something down the line.
Okay. Do we want to keep going with questions, or do we want to do something else? Like, what do we want? What are we thinking here? Tannor, you want to talk on the interview? Maybe you want to spend 2 minutes on that, and then we can.
Yeah. Then you kick me out.
You can have up to 5. We'll be generous. It's
like 3.5 final offer. Go.
People were, I think, pretty shocked about the question that I asked about him buying stock. I think it was a prudent question to ask. And for real, Anthony Inoto and team said no question is off limits. Like, they were so transparent.
okay.
The companies that we did think had really strong communications with retail, I had to leap through sending drafts back to the company, them potentially cutting out questions that they didn't like the answers to, all this sort of stuff, right? Where SoFi was extremely not loose, but they were just like, yeah, if Anthony Inoto feels like these are right questions, then go ahead and ship it. So we didn't have to send them a draft. We didn't have to do anything like this. They just said, okay, time to post. We knew about the show on a Tuesday. We met with the team on a Wednesday. Tevis and I drafted our questions on a Thursday, and then we did the interview on a Friday and then posted on a Friday. I mean, it was fast.
Yeah, usually for context, these things take weeks, if not longer.
Yeah. Their team, like one of the members of their team jumped on a call with us at like 11:30 at night. Like, we were just in a StreamYard going back and forth. I was playing Minesweeper, Tevis was working, and he was like, oh, this guy is free. Potentially he can jump on our StreamYard. And I was like, yeah, send him the link. And he just joins, and we're talking about what potentially Anthony Inoto is looking to do, and if his camera and all that stuff is all set up, just to make sure that we don't have to spend time setting up and making, like, we could just jump right into the questions. So
yeah, no, the team was really great. Everything with regards to the prep went smooth. Like I said earlier, in this stream, I think one thing that we were thinking about was to make it a very welcoming environment for them to want to do this again. I even told their team, I was like, hey, loved working with you guys. hope we get to work together in the future. And he was like, yeah, me too. I was like, okay, great, cool. Very much considerate with regards to the questions that we asked, and we're like, what do you guys think? And they said, hey, these ones are good. These ones, he might not be able to shed a lot of light on, so on and so forth. And it was back and forth, but yeah, nothing was cut out of the interview. There was no part where they were like, oh, can you not include this? We just had somebody from their team backstage who was listening in, and at the end he was like, yep, good to go, and checked in with Anthony, and Anthony was like, yep, good to go. So was really, really well executed, operationally speaking.
Yeah, people said DDI was the person that made this come together, and I'm sure that he was helpful in the way that came together. But I heard that they were talking about this before he even joined the company, and that whenever Chris got there, he was actually quite pleasantly surprised to know that they were looking to broaden out on their retail engagement. So, some people were saying oh, we have an inside guy or something like this. It's not true at all. They reached out to us, and they've been thinking about this for some time. So yeah.
Cool. All right. Thanks, Tanner, for that insightful take. Goodbye.
Congrats to both of you guys.
All right. Let's keep on with our questions.
All right.
Screw that Tanner guy.
Rapid fire.
I love how we're going live in an hour again. Dude, what?
No. Let's do this in 15 minutes.
Okay. Zeta leaps at this price. Is the SaaS sell-off over?
I don't know about the sell-off being over. Zeta is a little bit caught up in that. I think it's attractive here. I've considered a swing position on it. Yeah, so I like it.
Yeah, thank you. We like the Friday night shows as well. NBIS getting bought out. What are your thoughts? I think someone's going to try. I don't know if they're going to succeed.
Yeah, I think if they tried 6 months ago, even a year ago, yes. Now it's tough.
Nate. Somebody's asking Nate. How much do you think NBIS will dilute the stock to scale and meet such strong demand? Look, I don't think, I know dilution has been drilled into our minds to be inherently a bad thing, but you have to ask, what are they doing the dilution for? And if it's accretive to the degree where, okay, well, if I dilute you guys and build a data center that I wholly own in the US, and as a result of that, get a contract that's equivalent over the next 5 years to my entire freaking market cap, like Microsoft is, that dilution is probably accretive. It's going to pay higher ROI to do it than to not do it because it can grow so much faster. So I think that's the way that I think about dilution. I think that's the way you should think about dilution, not necessarily that this very caveman response of oh, dilution equals bad.
Yeah, it does if it doesn't return anything of value. So if it's dilution for something stupid that doesn't work, that's really bad. If it's hey, we will double our share count, which isn't happening here. I mean, it is for NBIS, but we'll double our share count, but the earnings will triple as a result of that. Yeah, sign me up for that, please. And the return here is absolutely obscene right now, helped by the supply-demand economics.
Yeah. At what price would you both be interested in buying Hims again? Honestly, man, it depends on what management says. It's not a certain price. I buy it. I sold it at $20 and I would buy it at $40 if I was super bullish on their roadmap and their management and so on and so forth. It's not necessarily a price thing because you buy to hold for many years into the future.
Yeah, I think they'll have at least, even not including this FDA stuff, it's more of a second half play anyway. FDA stuff, I think, has a cloud over it for a while. So I'll see how that kind of plays out. And if the thesis accelerates, they continue to execute well, if it doubles in price from here, like Tevis said, that's still worth buying.
Yep. Okay, Musk buying PayPal back was just speculation, but could he be the power pushing PayPal down? No, dude, you're thinking too much about this. He doesn't need PayPal. This is this is not something he's thinking about. Are we degening? Hold on, this is a question for me. How are we degening on the Super Bowl? How are we playing this? When is the Super Bowl?
The Sunday.
Oh, it's this Sunday.
Yeah,
Dude. I think Pats win this, honestly.
I think so too.
I would probably go the spread, but I think Patriots win.
So I'm a Titans fan, and it's tough for me to see. I mean, the Titans are so mismanaged. They're like a really terrible company that continues to fail to execute and shoot themselves in their own foot. And I hate that I'm a fan of them. But Vrabel, they fired. And I'm like, dude, Vrabel's really good. What are you guys doing? Like, is he the best coach ever? No. But yeah, I think the Patriots are going to win under him. He's a great coach. And I mean, I'm kind of excited for that for him. So
there's a 50 Cent commercial, but have you seen this? About what brand?
There's a Hims commercial. You saw that one?
Yeah, no, I saw that one. 50 Cent is not.
I thought that was great. Like, it's like,
that was a good one.
Focus on these things, not this stupid like pill thing that has such little upside and such risk. What are you doing? But no, I don't know anything about this.
Yeah, Catherine, let us know what 50 Cent is shilling. I will definitely be watching the Super Bowl now. Oops. I tried to put somebody on timeout on StreamYard, and I think I accidentally banned them. My bad. Thank you, George. Really appreciate you being a member for quite a while now and supporting the channel. Zeta 2026 version of Hims and SoFi. Very different companies, Hims and SoFi, but sure.
Yeah, I don't like it as much as those opportunities, but I did say, I'm considering a swing. We'll see. Like, it's hard with buying NBIS now. That might have changed it for me, just because NBIS I want to hold like long term, not just a swing. Barring some ridiculous pop that I think is unsubstantiated, but that'd be much higher upside. So, yeah.
Are we expecting a SoFi commercial at the Super Bowl? That could be interesting. I don't think
they could, but I don't know that they need to.
Yeah. I mean, they have an entire stadium that they run commercials on like every game. So
yeah, they're at like 8% market saturation as far as it's close to where they want to be. I mean, like, they want to get that as high up as possible, but I think 10% was like a stated goal from maybe when they first bought the stadium. I can't remember.
Yeah. Is that a Red Bull? What happened to Celsius? Dude, they're not selling Celsiuses at my Costco anymore. So Celsius is zero? I don't know.
That's extreme growth stock Celsius.
Yeah, exactly. I was on the Alani New train. I don't have it on me, but yeah, I also got some Red Bull. Any other multi-bagger stocks in your opinion this year? Air Test Systems. Follow Roy's videos.
Yeah. Air, very solid. Figure might be. Depends on like the crypto overhang if it'll persist. It's a silly one, but it's one. I mean, you've seen it explode to the upside, and I've not bought it yet. So I think DM&R from here, SoFi as well. Like, if you're talking about from here, year to date, or I mean like full year, probably still, but it's a little bit more challenging. So,
bro, which one of you freaking degenerates are betting on the length of the national anthem? I think it's predetermined how long it is, guys. What? I don't understand people, man.
I will say, as much as I like to joke around with Canada, you guys have a beautiful national anthem. So
yeah, except they changed the words to make it more like woke appropriate.
Oh, really?
Yeah. It's like, it's not like they changed it. It's not like thy son's command anymore, because sons is like, oh, we need to be more inclusive or some shit. So welcome to Canada. What's the expectation for the market on Monday?
I'm going to save that question. We're going to talk about it with Steve as far as whether we think this rebound is legit or not. Sorry.
Yeah, no, I think let's chat about it at 9 p.m. Any thoughts on Couch Investor buying RBRK? Rubric.
It's a cybersecurity firm, a little bit differentiated in the market. It's been like a year since I've looked at them seriously. I liked what I saw, and they were very volatile. They went up massively. They pulled back substantially. caught up in the SaaS stuff. Cybersecurity is not accepted from that, except for kind of Cloudflare. Sam Solid covers it well too. So I would have to look at it again. A number of people were asking me about it. I was kind of wondering like who is pounding the table on it. I guess it's Couch. But if it's the same quality, and I don't think that it is, I've had like very little time there. I think it's interesting. It is on my follow a little bit closer list, and it's been on there for close to a year. So basically, I have like 8 or 9 stocks, 7. Usually, it's like less than 10 of closely watched names that, depending on what happens with them and valuation, I may get a position, and I know enough about them. Rubric, I'd have to get refreshed on, though. Honestly, that's when I just kept on there. Quality, but yeah. Oscar, I think it's an okay play. I don't think it's elite. And I just like super concentration. I've always thought that about Oscar.
What about Bloom? I know Bloom was a trade that I think the Dumb Money guys were on for a while. And
yeah, I know so little about it.
I think that got beat down too.
Yeah, it did.
Did it? Oh, it got down and then it climbed back up, I guess. I don't know. Or no, it's kind of.
Yeah, QXO is one that I need to spend more time into. It was Steve's gift to me, but
right.
Yeah, I wasn't even researching for this. I was looking at like hyper growth that's expected over the next 2 years, above a certain market cap, having at least positive net margin, at least 8 billion market cap size in U.S. stock. And yeah, QXO is like, oh man, I didn't realize that they were. Now, it is off of a very tiny base, but if you look at the actual revenue that they're looking at growing versus the percent, which is gaudy, I think it's like 1,400% or something, 2-year compound annual growth rate. Too small of a number, like as far as the base to be meaningful, but it's interesting, and I like Brad Jacobs. So, but yeah, Bloom, I don't know enough about.
Yeah. June says that Matt knew about Bloom, but liked other energy names better. And Matt is my quant when it comes to that sector, so I'm going to trust him. On a more serious note, for an exposure to data center construction, energy plays, and platonic material price increase, what do you think of Lithium Americas? Is this the thing that the USA took a stake in?
I don't know.
I'm not sure, but didn't the government take a stake in this thing?
I vaguely remember it, Tevis, but it's not standing out to me. What reminded me, was Tesla's earnings, that the update on the lithium project that they're doing. So, yeah, I don't really know enough, to be honest, other than just like seeing what you're seeing. Like, there's going to be a lot of demand for the product, even if we switch over to some different battery types. That's going to take still a long time to scale and switch things over, and not everything needs to go or even should go that direction. So.
Okay. Updated thoughts on Duolingo. Duolingo. It's getting hit hard. It's at 119. Jesus Christ. I went down to 112.
I was like, what's it at? No,
yeah.
I bought a position for like a few days, and I'm like, looking into it. I don't know. I think that there's further downside and there's better opportunities. And boy, there was a lot more downside than I expected. I think it's decent. I think that the AI thesis of it disrupting Duolingo is wrong because people don't understand what it is. I think what they have to do, though, like even now, they're still trading at a pretty decent multiple, growing very fast. So, but what they have to do probably is either convince the market that they're completely wrong on AI, which I don't think that's going to be disproven, at least for a long time, or they have to show that they're more than just a language learning platform, but pivot into a learning platform, which we talked about during that Shark Tank episode. Specifically, chess is one of those things. I see a chess question in the chat. Could be many other skills as well that take repetition, like music. If they do that, and there's more competition in those spaces, but they seem to be pretty effective at that, in monetizing that and making it feel like a game, then yeah, I think that might be enough. But until then, I think there might be just better opportunities even in software, honestly, if we're looking at it.
Yeah. Honestly, so on this note, I don't know if you know Antonio, but Antonio was pumping Dual for like the longest time. He was like, Dual to $1 trillion. Yeah, Linares.
Yeah.
This guy came out a couple days ago, and he's like, "I didn't even buy Duel," and I was just like,
Yeah.
"I'm sorry, what now?"
I
And I think either way, it looks horrible for his brand, and this is exactly why people hate content creators in the finance space, because they just shill things for the sake of content, and they don't even put their money where their mouth is. So I think if that's true that he didn't even buy Duel and he was saying Duel to $1 trillion or what, like that's so incredibly irresponsible. And that was the biggest like shocker with regards to Duel that I heard this week. I don't know if you also saw it, Roy.
I didn't, but it doesn't surprise me. Actually, I don't block many accounts. That's one that I did just because some of the things that you said. It's not me being jealous of a guy that's had a lot of success. He has. I think he's very good at identifying quality, but he's also very disingenuous in the way that he tries to pump things. Of like Palantir was one of those. Like he was early in Palantir and was one of the guys that I was like following, listening to him. Like I just don't like his style. I don't trust him. He's sketchy with some of the things that he was doing. A couple other Palantir guys are like that. Amit, he's legit. He's amazing. He is exactly the same guy as he is streaming in person. Brilliant mind as well. So Arnie, like what, whatever. But yeah, he's like Palantir is a 100-bagger from here, and it's like trading at what, like $100 a share. It's like, bro, unless you're talking about 30 years and rampant inflation, I'm bullish. But come on, dude. And it did the same thing with HIMS. He's right on HIMS up to this point, and I'm sure. I mean, you can change your mind, like classic point, like we did on HIMS. I did on PayPal, so I'm not calling him out for that. But yeah, he will say he's bullish and not really be. A number of times I've seen him flip-flop like that as well. And it's like, oh, I never really did this. It's like, so you're just lying to people? And so between that and then some stuff that wasn't necessarily public knowledge, I decided it's just easier to tune out the guy and block him.
It's crazy.
And I don't mind like disagreeing with people. Like the long investor, I disagree with him oftentimes. And I think he has a wrong philosophy and mindset on a lot of things. Now we had HIMS in common and PayPal. Now I have neither. So, but I love following him because he thinks so differently and it brings me out of my echo chamber. But he's reasonable. He is very reasonable. He's credible. He's not a pumper by any means.
Yeah. Okay, let's which city is most expensive, Toronto or New York City? I think Toronto, just because the salaries here are much less, so like the discrepancy is much larger. But I might be biased because I live here. New York City is not cheap either. Do you like the pizza in New York City? Yeah, it was pretty good. We had a lot of it though. I wonder how Alex Chris is doing. Probably more depressed than the rest of you were yesterday. Let me say that.
Yeah. I mean, that's got to, I feel for the guy. I still like him. And I hope he's doing well. But it seems like based on LinkedIn posts, I was kind of curious on that. He's been radio silent for actually a while now, and it makes sense why. I think this hit right after Q2 earnings that he knew that he was out. And that's just tough. Like, yes, this was some about money for him, but like he worked into it, did very well there. I'm sure if he wanted to, he could just retire and be set for life. But like, was he a perfect CEO? No, but I think he was building the right direction. He had the right vision and mindset. There was missteps. I think they should have given him more time. It was a really bad Q4 though. But this is just, I'm not going to rehash PayPal. But yeah, wish the guy well. I'm sure he'll land on his feet. He's going to be fine. But
yeah, I'm sure he won't be, begging for change on a street corner anytime soon. So, what's your top 5 holdings?
Robinhood number 1, I think. SoFi might have overtaken it because I added SoFi and I didn't Robinhood. Palantir. What's that? Yeah. I'm just counting. Air Test Systems, and I would need to look. I think probably Nubank, just because it's done very well in terms of price action.
For me, SoFi, NBIS, cash, which is what I do the cash secured puts with. But if we skip it, I'll say BM&R, Meta, Bitcoin.
Yeah. BM&R might be 6th or 7th now. Just I did sell a small amount just to make a purchase that I did before I knew that I was exiting HIMS. And I hated doing that, but I was like, I need NBIS. So it's tough, man. But yeah, it's fallen so much. I think that it's probably almost certainly under 5th. So
yeah. Have you guys ever shared your thoughts on Bloom? I'd be interested to. We just did, and yeah, we just did. So just rewind like 10 minutes. Why are you selling out of hymns? I'm disappointed. This is your answer. Roy sold all his hymns and Teva sold most of his. Sounds like they weren't fans of FDA shenanigans. We covered it earlier in the pod, so just rewind. Did you sell hymns for a loss? I think this latest tranche that I sold today, I sold for like a 5% loss or something like this, 5 or 6% loss. But overall, I'm profitable on hymns. It's my number one premiums collected stock. I've collected more in premiums and hymns than was my entire position. So the next tranche that I'm still holding, I'd probably sell for more of a loss because that one is down like 30% or so.
I sold probably 80% of my hymns 5-6 months ago, and before too. Like the short squeeze events, I'm like, this is awesome, but yeah, it's not sustainable. So I'm taking some profit. Some of that was unintentional through covered calls at higher levels, I think 55s or 60s, which at the time I was like, oh man, but I mean, that worked out. And the last little bit was like maybe 15%, no, 10 or 15%. It was somewhere around there is what I was holding. I don't know the exact figure, but I sold the rest of it today. And so that, even there, I don't think was at a loss. Yeah, it would have been actually, because I had averaged down at one point or averaged up at one point. So yeah, the last little bit was underwater, but I was telling some people like the other day before the FDI pushback, that's what really concerned me, that I just didn't know. Like it seemed like the thesis was weaker, that there was this overhang, that they're just going like about, instead of these really good opportunities that they have, chasing things that have a whole lot of risk and without much upside. Like what's the margin on that pill going to be? Like, come on.
Also, you guys need to do your own homework. Tevis is not your dad, bro. Build your own conviction. I agree with that. Although I don't know you. I could be your dad, maybe. I don't know. Do you guys hold Tesla? Yeah, I do hold a little bit. Do you think software stocks will sell back off on Monday? Join us at 9 p.m., Michael Anthony, where we will be chatting about this with Steven. Which city is most expensive in Canada? Calgary, Vancouver, Toronto, Montreal, Quebec. I would say Toronto and Vancouver are number one, Montreal number two, and then Calgary and Quebec are like, I would break it out into 3 buckets. So Vancouver, Toronto, Montreal, and then Calgary, Quebec. Didn't he and his wife buy the stock when it was around 3? Yeah, so Anthony Noto, along with his wife, bought the stock. It never dropped to $3, though. He bought the bottom at around $4.50.
Yeah, I couldn't remember exactly when it was or where it was, but I think it was shortly before I got in. And maybe did he do several buys, if I'm not mistaken? Yeah, he did. Because I remember he bought while I was after I'd been a new shareholder. I loved it. I love insider buys. Like even this week, like people are like, "Oh, dude, it's $250,000." Not everybody is a multimillionaire, and anytime an insider buys, unless it's like 5 shares or something, that's a great thing. There's only one reason why they buy. They want to make money too.
If homie's buying with a wife's account too, that's when you go all in. All right,
dude. Yeah, that's a good point.
Any opinion about ServiceNow? No. Roy might have one though.
Steve and I talked about it actually last week without Tevis in the after hours. So you need to be a member to any of our channels to watch that. In essence, Steve is extremely bullish on it. I think McDermott is a very good CEO. I think they're better positioned than some of the SaaS peers that I do think are going to run into some problems with AI, like CRM is one that we talked about a lot. I think it's a pretty decent opportunity, especially if you're looking at a software giant instead of some that are like the Figmas of the world of that sizing. But it's not like super exciting for me. So I would skip over that one personally, but it just because I like a very concentrated portfolio, I would put it in the good bucket versus a great opportunity bucket. And there are like one last thing on there. Listen to the bearish side on this too. There's some bearish concerns where before I would establish a position that I would need to check out as far as the means of the revenue growth versus what the CEO says as far as inorganic versus organic, and whether it's sustainable in the future. So,
yeah. Okay. Chess Elo on Rapid. I don't really play Rapid. I just play Blitz 5 minutes plus 0. I'm about 1,700 on that. Any BMNR ads on this drop? Yeah, I bought earlier this week. Are you streaming FinTech Friday? Yes, in 30 minutes. But we'll see. We didn't expect the show to be this long. How many grandmasters were created from Duolingo? 0. Thoughts on hymns below $20 after hours? I'm pretty sure we shared all of our thoughts on hymns. Do you have any dividend stocks? Roy holds NVIDIA and
BMNR, NVIDIA,
BMNR.
And used to hold PayPal. I'm out of that. So
Yes.
yeah, I was becoming a dividend investor just because the stocks I were holding were issuing them.
Yeah. Do we hold Neo? Neither of us hold Neo.
I don't like it.
Yeah. What other stocks do you sell covered calls on? Amazon, Meta. I try not to on NBIS, but I have. And then I try not to on SoFi, but I have. I'm doing that more actively because I got assigned. I got put like a stupid amount of SoFi shares because it wasn't worth rolling them out. So, yay, I own way more SoFi now, guys. So I'm going to be writing. Yeah.
Yeah. Outside of earnings plays this week, I did not write any or many. It was very, very few just because the way that we were tanking in price, especially on Monday, I was like, dude, this at some point the bottom will at least bounce, like dead cat bounce. And I'm like, just in case, like the premiums are so little where I'm comfortable selling them, it's just not worth the risk here for me. So I will sell some more next week, especially if Monday opens up green. But I do it on most of my positions. I'm a little bit more careful in BMNR right now because, I mean, you can see when it bounces, it really bounces. And I don't really want to sell it underwater, even though I've made some good returns on the premium. And then the other is Nubank, just like the options chain. Well, actually, there's one other too. But Nubank has a terrible options premium, rather. And then Airtest Systems, they only have monthlies. They don't have weeklies. And that's super volatile when, not if, these bookings post, whether that is a press release on orders. Sometimes they wait and do that on earnings day as well. That is going to cause my covered calls to be destroyed. So it's not worth a little premium there versus the extreme upside that's in my mind.
Yeah, agreed. Yeah, I'm going to need to go lie down with my eyes closed for 30 minutes before I hop on with you guys again. But real quick, 3 questions left. Would I buy a hood at these levels? Absolutely, I would buy a hood at these levels. What's my opinion on Reddit? I haven't looked at Reddit. I don't really like how they make money, but yeah, Roy, go ahead.
Like as far as an investment, I think it's decent. As far as a product and what they do, I don't especially love them. I don't hate them like Meta. I also don't think that the opportunity of Meta. So I'd almost say, hey, just go full cancer Meta. I mean, not throwing shade at investors, but that's just where I see Meta, or just stay out of the space.
You know what? I could totally see, maybe somebody can clip and ship this, but I could totally see Reddit being bought out by an AI company just for them to leverage the data, because most AI is already trained on Reddit. And if they can close that to their competitors, that could be a really big opportunity area.
Yeah, that is not crazy, especially because like Google already has done that. Not as far as acquisition, but they have in-house, and you can see what they've been leveraging their AI for is, and actually even their search feature is just pointing internally as much as possible. So of course they own and control YouTube, but yeah.
Yeah, and think about this. OpenAI was thinking, like there was rumors around OpenAI acquiring Pinterest for the same reason. And to answer Catherine's question, if they already use it, why would they buy it? So that they can lock it and nobody else can use it in the future.
Yeah, it's the same thing as what happened with advertising space, that these giants became walled gardens. And like, oh, we're such giants. If you want to play in our playground, you have to do it by our rules. And so they kept out competitors. So that's worked very well for them. I think it'd probably work out well this time too. I don't love that as a user, but yeah, it makes sense, Tevis. Good call.
Wow, Chris Patel went long PayPal.
He did.
Yeah, he did. That's crazy.
I think my take is exact same, Tevis. I think it's crazy. He's right that it's undervalued. I do see that, even as many problems as that quarter 4 had. It's clearly a business that's in decline. They're guiding for decline. Now, you can say, well, that's because of the new CEO and they're being super, super conservative. Yes, that's true. But even then, the revenue is decelerating meaningfully. And so if your thesis is built on buybacks and free cash flow only, mine wasn't. That was part of the downside protection. But if it wasn't for the growth story and the pivot, I would not have been in PayPal. Switching over to Enrico Lures, he, from HP, he's going to be more aggressively a cost cutter. You might see some bounce. I think that you probably will, but it's a business that's deteriorating. If they shift, if best case scenario for PayPal, they keep doing what they're doing for advertising. They keep doing what they're doing for PayPal World. They execute on this. Fastlane, hopefully it'll work out for them. That could still be incredible upside, but they don't have Alex Chris at the helm. They have some old guy that doesn't understand software, said he's a hardware guy running a business. He understands it fairly well because he's been on the board of directors for a while. But dude, I think that this is a mistake. And it's at this point a very clear value trap. Like the numbers are there from this quarter. The guidance numbers that they themselves publish is also indicating value trap.
Yep. Cool. Do you plan to invest in any semis or SaaS? The only SaaS that I'm looking at is Figma and TBD.
Cloudflare.
Oh, yeah, that too. Yeah.
Yeah, love me some Cloudflare. Like that, more like that's the thing with Rubrik, going back to it just briefly, like I would rather own Cloudflare. It's always traded at a premium, substantial one. But I mean, you look at their moat, like 20% of internet traffic goes through them. The way they're leveraged, like you can see them showing off Claudebot, not to be confused with Anthropic's Claude. You can see with some of the stablecoin mentions, you can see that with AI and agentic and scraping. Like, dude, and the Matthew Prince, an amazing CEO. So we'd love to do that. Would love to add more to Palantir. And of course, my semiconductor plays, probably good on those.
Yep. Cool. Thank you all. Love you all. Long time. See you in 29 minutes and 20 seconds at the, what are we calling this new show, Roy? Stock Market Unfiltered.
Stock Market Unfiltered. Yep.
And yeah. Take a break, go grab a drink, grab some dinner, and rejoin on whatever channel you're watching. And yes, I will be taking a nap, night. I'm lying down for 10 minutes so I can get all the voices out of my head, and then I'll be right back to entertain you guys for another hour. Bye-bye. Bootleg Weekly, back on Tuesday, 6 p.m.